does it work? Okay. So I'm using Kaplan. I'm using Kaplan revision kit. So for the session today, I've been getting students have been messaging me saying that they are finding what's the question? Okay, they're finding Dargent Co a bit technical, a bit difficult. So let's see, do we have Dargent here? Okay, there is Dargent. Okay, there you go. So Dargent Co, it is one of your past paper questions, and the question comes from March-June 2017. It's a bit old question, but definitely adjustments could be a bit tough than how it can come now. Having said that, we'll be able to complete the question, but I'm not going to do it under exam timing. Okay, I'm not going to do it under timing, because I'll also be trying to cover a bit of theory as well. Okay, so coming back, let's go back to Dargent. Like always in the exam, we will be having a sheet to answer, an Excel sheet to answer. So what I'm going to do is I'm going to also put up my Excel sheet on screen so we can start answering it. Okay, so let me call this. It's not connected. Let me quickly connect my. Okay, so there you go. As always, I'm going to give you some steps like we always look into how to do questions like this in terms of consolidation, and we are going to start following the steps as always. Okay, let's go to the requirement. The requirement says prepare the consolidated statement of financial position for Dargent Co as at 31st March 2016. Okay, so the requirement is straightforward. Prepare the consolidated statement of financial position. That's the requirement, and I'm sure at this point this is not the first time you are looking at a consolidated balance sheet question. I'm sure you have looked into consolidation before as well. So basically, consolidation, when we take as a part of your syllabus, as a part of your paper, it's a crucial part of your exam. Consolidation will be there throughout your paper for about 15 to 20 marks, but if you're lucky enough, you're going to get as a part of section C for about 20 marks, something like this. Okay, if you get consolidation, very simple. We have a structured approach. Our approach, we are not going to change no matter what. Our approach, we are going to stick to it no matter what. So quickly, what is our approach? Our approach, number one, we will try to get our group structure. We'll try to understand the group structure, number one. After understanding the group structure, we need the reserves as at the balance sheet date, as at the reporting date. Once we do that, we go back, do the line by line addition. Once we do that, we check the notes. Based on the notes, we do the adjustments. What are our primary adjustments? Our primary adjustments, we know, as you know, intragroup transactions, URP, if there is impairment, if there is any dividends, eliminations. Yes, all those are our intergroup, our primary adjustments, which we know. But having said that, in the exam, you might get a surprise. A one or two particular surprises, or if you have not gone through the syllabus, everything could be a surprise. But if you know entirely, if you have done Kaplan entirely, maybe one or two surprises, you have to be prepared for it. You can't panic. That is number one. Okay. Number two. We will be taking consolidated retained earnings as always as our balancing figure. But for the purpose of my marathon, I will make sure that I will balance that as well. Okay, so right, as always, let's go back to the requirement in the exam. We are going to take a moment to understand what is the requirement. Prepare the consolidated statement of financial position for Daj & Co as at 31st March 2016. Prepare the consolidated statement of financial position for Daj & Co as at 31st March 2016. Okay, now once in the exam, once you have done reading the requirement, you can immediately go back. And read the question. But when you have to read the question, one of the most important things that you need to do is, as per our approach, number one, you will have something like this in the exam. So basically your exam paper will look, your exam screen will look something like this. Okay, it's gonna look something like this, correct? Now it's gonna look something like this. What you're gonna do is you're gonna leave about 50 lines. Come right to the bottom. Say number one, workings. And always we start off with working number one. Working number one will be group structure. So you'll go there and you say W1 group structure. Okay, no matter what, we're gonna understand what the group structure looks like. Okay, now look here, stop talking and we are gonna come back to the questions. Okay, and let's read the question together. Okay, on 1st January 2016, so the moment you see 1st January 2016, the very first thing that I will see is, okay, 1st January 2016 is here, my year end is 31st March 2016, meaning the acquisition happened during the current year. If the acquisition happened during the current year, we call it a mid-year acquisition. It's a mid-year acquisition. So you have to be a bit extra careful. In terms of your profit allocation, your retained earnings allocation, because here they have acquired on 1st of January 2016. Your year end is 31st March. How long has it been since they acquired? It's been 3 months. It's been 3 months since they acquired. You need to know that in the exam. So I will say, okay, group structure, but I would also, for me to keep in mind, it's a mid-year acquisition. Okay, please look here, I'll give you time to write mid-year acquisition. So for me to be on the safe side, I'm telling mid-year acquisition. Why? If it's a mid-year acquisition, the incomes and expense of the subsidiary will be time apportioned if it's a profit and loss statements. If it's a balance sheet, nothing to do there. However, when you do the retained earnings, that is for goodwill calculation, there will be an impact. Brilliant. Coming back, we are looking at the group structure. Group structure on 1st January 2016, Daj & Co acquired 75% of Latrico's equity shares. 75%. So you can keep in mind, okay, Daj acquires, not Sargent, it is Daj. Daj acquires 75% of Latric. There you go. And Daj is going to be the parent, Latric is going to be the subsidiary. And then do you have any NCI? NCI, yes, NCI, no NCI. NCI, yes, there is 25%. Okay, don't shout, I'm getting scared. 25% NCI, that's good. Okay, now that is done, as simple as that. Okay, in the exam, group structure, number one, done and dusted. Okay, now that we're done with group structure, number two, what do I need in the exam? I need my reserves. As at the balance sheet date. Okay, now what I would say is, okay, working number two, reserves. Okay, now when we are talking about reserves, I will need reserves of the parent, I will need reserves of the subsidiary. But reserves, when do I need it? I need it as at the reporting date. Okay, nothing changing. At the reporting date, I need the reserves. Okay, I go back to the question. Where can I get the reserves as at the reporting date? I can go to the balance sheet. In the balance sheet, they say retained earnings on 1st of April 2015. On 1st of April 2015 is 20,000. 1st of April 2015 is 20,000, and for the year ended 31st March 2016 is 16,000. That is for the parent. and subsidiary 19,000 and 8,000. Okay, what do I need here? I need the entire retained earnings as at the balance sheet date. Now what your examiner has done is, examiner has given you the opening retained earnings plus current year profits, but what you need is the total. What you need is the total, because I have always said, and we will always be taking, if you've been my student before, I have always said, take retained earnings as at the reporting date, entire total, meaning 20 plus 16 and 19 plus 8. So I come here, 20 plus 16 gives me retained earnings, 20 plus 16 gives me 36,000, and here I have 9 plus 8 gives me 17,000. Are we clear, everyone? Are we clear, everyone? Does that make sense? Yes or no? Does that make sense? Yes or no? Retained earnings as at the balance sheet date. Okay, now this is starting of the year. That is not my balance sheet date. My balance sheet date is 31st March 2016, meaning my closing retained earnings equals to opening retained earnings plus current year profit. Are we clear? We are clear there. There's no problem. Okay, super. Let me go further. That is done, and I want my revaluation. Okay, the question doesn't show any revaluation, so meaning I'm gonna go down. Still, I'm gonna go down. Okay, it's not 17,000, it's 27,000. Okay, so basically it's 9,000 plus 8,000. Okay, so it's 27,000. Okay, super. That's correct. And then what do I have? I have a revaluation. I'm gonna go down. And I'm gonna say revaluation, because my reserves, I need retained earnings and revaluation. That will be for parent and subsidiary, but I don't see anything, my dear. Correct? Okay, that's done and dusted. Okay, now I have not even read the question. What am I doing? I'm putting the structure, adding the flesh. Let's look at it later. Let's put the structure. The structure is what? Group structure. Number 2, the reserves, which is done. Number 3, I'm going to put up the line by line addition. Okay, so everybody with me, I'm going to put up the line by line addition, and you know, when you put up the line by line addition, you have to leave space. For what? Goodwill. You have to leave space for investment in associate. You have to leave space for consolidated retained earnings, NCI, consolidated revaluation reserve. There we have no negotiations there. Okay, coming back, I'm going to go to the top. I'm going to say Dargent group of companies, consolidated statement of financial position as at, what's the year end? 31st March 2016. Okay, there you go. That gives me 1 mark in the exam. If I give the correct heading. Okay, did I give the correct heading? Yeah, there you go. That's done. Okay, now going back, nothing changing. I have my non-current assets. Non-current assets, what do I have? Under assets, I have my non-current assets. So assets, and below that non-current assets, what do I have? I have my property, plant and equipment. Okay, in the exam, I want you to copy paste property, plant and equipment. You have the option of copy pasting. Okay, now we are going to do line by line addition. When we are going to do line by line addition, we are going to add the assets and liabilities of the parent and subsidiary. Okay, so property, plant and equipment, I'll come here. 75,200 equals 75,200 plus 31,500 done. Next, property, plant and equipment done. Investments. Okay, when you talk about investments, they say investments in A. Okay, so there is an investment in subsidiary. There is an investment in an associate. I think investment in A. Okay, so probably I know by now the group structure is going to change. I'm going to come here. So probably an associate. I'm not sure how many percentage, but we have associate A. They have not given me here, but probably I'm sure the note 4 would tell me how many percentage. I'm sure note 4 will tell me how many percentage. Okay, if you really want to, you can at this point go to note 4. Note 4 says the investment in A represents 30% of the voting share capital. So very simple, I can say associate 30% done and dusted. So therefore, my investments will have, I have investments in subsidiary. In subsidiary, the name of the subsidiary is will be Latry. So I will be having investments in Latry, and then I will also be having investments in Amari. Done. Okay, so investment in Latry will result in goodwill on acquisition. Investment in Amari will result in investment in associate. Okay, so investment in Latry subsidiary, they have not given me yet anything. I do not know. Probably they have not recognized it. I am going to recognize it. Investment in Amari, they have given me 4,500. So I will have my 4,500 here. Are we clear? Are we clear? I am just putting my structure out. I am getting my structure right. That's all I want to do. Super. Let me go further. Let me go further. Current assets, inventory, trade receivables, bank. Okay, and then I'll go on. Current assets, inventory, trade receivables, and bank. Okay, how much is my inventory? My inventory is 19,400 plus 18,800 equals 19,400 plus 18,800, correct? And then 14,700 plus 12,500 equals 14,700 plus 12,500. And then I have bank 1,200 plus 600 equals 1,200 plus 600. Okay, that gives me my total current assets. Okay, done and dusted. Now I can move on to what? My equity and liabilities. Okay, my equity and liabilities, I'll come there, and below that I have my equity. If you take my equity, I have share capital, equity shares, share capital. Okay, in the exam, to be on the safe side, also have a share premium. To be on the safe side, if the company has issued any shares, you can take it on the share premium. So just leave another line, you can call it share premium, and then NCI share of net assets, and then consolidated retained earnings and consolidated revaluation reserves. Done and dusted. Okay, there you go. Done and dusted. We are just trying to get our line by line addition done. That's it. Okay, going further, we've got non-current liabilities and current liabilities. Very straightforward. Okay, there you go. Non-current liabilities. Under non-current liabilities, what do we have? We have 8% loan notes. 8% loan notes. Our 8% loan notes are standing at 5,000, so equals 5,000. Done and dusted. And then I have my current liabilities. Under my current liabilities, what do I have? I have 24,000 plus 16,400 directly. 24,000 plus 16,400 directly. Correct? 24 plus 16,400. 24 plus 16,400. That's correct. Okay, done. Now, very simple. The thing is, all what I have done is I have created a structure to answer. Now this structure, the method has to be followed throughout. You can't change it. While I put my structure, I have left space for goodwill, investment in associate, share premium, NCI, consolidated retained earnings, consolidated revaluation reserve. Are we clear? Are we clear, everyone? Okay. Now I'm in the exam. I put up the structure. You've taken your water bottle. Have some water. Chill. Don't worry. Chill. Have some water. Take it easy. Make it easy. You get my point? Okay. Super. Now that we are done with this, now I'm going to go back and I'm going to start doing my notes. Very simple. I take a note. I do a working. Once I do a working, I will do my balance sheet, consolidated financial statements based on the working. I will not go back to the notes ever again. Are we clear? Guys everyone, are we clear? Super. Now let's get going, right? Only now I'm starting to read the question because I do not know what is happening with the question. Only now I'm going to start to read the question. Okay, can I change the page setting? A little bit annoying. Makes my life easier. Okay, I'm going to go back, read the question. Okay. So on 1st January 2016, Dagenco acquired 75% of Elco's equity shares by means of a share exchange of 2 shares in Dagenco for every 3 shares in El acquired. Okay, number 1. Hold on. IFRS 3 business combination says if you are going to purchase another company, there can be different types of methods, models that you can use to purchase the other company. Number 1, immediate cash payment. Number 2, a share exchange. Number 3, a deferred payment, a loan note exchange, whatever. All these 4 you should be able to understand in the exam, apply this in the exam. And if you had watched my recordings, I do it in KLP1. ABC acquired 80% of PQR on the following basis: immediate cash payment, deferred payment 920,000. We did the calculation. We got 733,418. We went for loan note exchange. We studied a share exchange also. Done. If you have watched my recording, if you have been in my class, but if you do not know, that's okay. We will see how to work that out. Okay. So there has been a share exchange of 2 shares in Dagenco for every 3 shares acquired. On that date, further consideration was also issued to the shareholders of L in the form of a $100 8% loan note for every 100 shares acquired in Elco. None of the purchase consideration nor the outstanding interest on the loan at 31st March 2016 has been recorded by Dagenco. Nothing is recorded, you are supposed to record it. At the date of acquisition, the share price of Dagenco and Elco are 3.2 and 1.8 respectively. Straightforward adjustment. It's a straightforward adjustment. I've seen this multiple times. Okay, that's okay. We will see how to work this out. Okay. Now, when you come back here, your working number 3 will be investment cost. They say your investment cost is made up of 2 elements. Number 1, share exchange. Okay, when you are looking at share exchange, look here, give it time to write. They say you are going for a 2 for 3. You are giving 2 shares and you are obtaining 3 shares for from the subsidiary. In other words, your subsidiary has how many shares? Your subsidiary has 20,000 shares, correct? Your subsidiary has 20,000 shares, so you go to the top, you will say 20,000 shares, you are acquiring how many percent? 75%, correct? For every share, you are going for 2 for 3. Super. So that means how many shares are you issuing newly into 20 equals 20,000 into 75% into 2 over 3. New shares will be 10,000 new shares. So these 10,000 new shares you are issuing, you are giving. At what price are you giving? At what price are you giving? You are the parent. When the parent gives share, invest shares, parent will give in its share market price. What is parent's market price? 3.2 into 3.2. So 3,000 shares into 3.2. So equals 10,000 into 3.2. That gives you 32,000 as your investment cost. Are we clear, everybody? Are we clear? Very straightforward, commonly tested adjustment. You should be ready for this. In other words, you are investing debit investment cost. Debit investment cost. Credit, you are issuing shares. So you credit share capital. Your investment cost will be 32,000. Your share capital at nominal value you have to take here, and anything extra will go to your share premium. That is the reason why I put up my share premium. Now your nominal value they say is $1. So you've been given your nominal value $1. Therefore, what will happen is equals 10,000 into $1 will go to your share capital, and you will credit your share premium. How much? Equals 10,000 into the difference between your 3.2 minus 1. 3.2 minus 1, which is 2.2, will go to your share premium 22,000. That is the first adjustment. That is your investment cost. That was straightforward. Are we clear? Everybody, are we clear? Are we clear? Everybody? Super. So this has not been accounted, so I am going to go and account it. So I am going to account it. I'm going to go to the top. My investment cost, where I've got here, my investment cost equals, let me connect it, equals 32,000, correct? Parent is issuing shares, so parent, oh, we've not taken parent share capital already. Our parent share capital should be 50,000. We should have taken it earlier. I'm so sorry, I missed it. It should have been equals 50,000, no share premium. Now the adjustment is the parent share capital is going up by how much? 10,000, therefore equals plus. Always try in the exam as much as possible to connect it to your workings. 10,000, making it 60,000. Your share premium is also going up by 22,000. That adjustment is done, and after that I will not look into that adjustment ever again. That adjustment is done, and after that I will not look into that adjustment ever again. Are we clear? Are we clear? Yes or no? Clear, crystal clear, no problem. Okay. Now I'm done with my working 3. On the working 3, I had number 1, first medium was share exchange, correct? First medium was share exchange. Okay. Now I have another medium. What is the second medium? They say my second medium will be a loan note exchange, which we have looked into before also. So a loan note issue. You are going for a loan note issue. Okay. Now what is the criteria for this loan note issue? They say further consideration was also issued to the shareholders of Elco in the form of a $100 8% loan note for every 100 shares acquired in Elco. Every 100 shares that you are acquiring, you are issuing a loan. Okay. So how many shares are you issuing? Basically, you have 20,000 shares. Subsidiary has 20,000 shares. Out of 20,000 shares, you are acquiring 75%. Am I clear? So basically, out of 20,000 shares, you are acquiring 75%. That is the number of shares that you are acquiring. For every share that you are acquiring, you are going for a 100 loan, and you are issuing it at 100. So into 100 over 100, meaning equals 20,000 into 75%. 75% into 100 over 100 should give you 15,000. Once again, you are investing, debit investment cost, 15,000, and you have a loan to pay, credit loan note, how much? 15,000. Are we clear? Take a top bottom approach in the exam. Take a top bottom approach in the exam. I know at this point I'm done with this. Now I'm moving on to this. Correct? And here they say it is not recorded by Darjan Co. I'm here. It's not recorded. None of the purchase consideration nor the outstanding interest. I'll come to interest in a bit, but now we have to account for what? The loan note investment. Now coming back to loan note investment, I have a 15,000 investment in addition that I have to incur. So equals plus, always connected 15,000. Am I done? Okay, now what do I have to do? I have to adjust my loan notes because I have a liability. Correct. Now I have adjusted my 15,000 here. The remaining 15,000 has to be adjusted. So I go to the top, 5,000 plus, how much do I have now? I have another 15,000 to adjust. There you go. 20,000 adjustment. Understood? Yes or no, everybody? Are we clear? Yes or no? Everybody, are we clear? Understood? Super. Let's go further. They say none of the purchase consideration, nor the outstanding interest on the loan notes at 31st March 2016 has been recorded. Meaning there is finance cost on the loan. So our next working will be working number 4. Finance cost. Are we clear? Working number 4, finance cost. So we have borrowed, how much have we borrowed, my dear? We have borrowed 15,000. 15,000 we have borrowed. Our finance cost rate, our finance cost is how much? Our finance cost, they say 8% loan note. So 15,000 into 8% I have to provide. But this is a mid-year acquisition. You have to be very careful because we are investing on 1st of January. Year end is 31st March. Therefore, we have to apportion it for 3 months. So into 3/12. In the exam, you don't have to show this. You have to directly take 15,000 into. You can take directly 15,000 into 8% into 3/12, which is 300. You can directly take that, no problem in the exam. You don't have to show this in the exam. Your examiner will go to this cell, check what is written in the cell. Are we clear? Here, all this you can directly take it, no problem. You don't have to waste time like me. I'm doing it for the purpose of our explanation. So I have 300 finance cost that needs to be accounted for. I go down. I go down. Now look here. My retained earnings is here. My retained earnings, I have finance cost that is not recorded. So I'm gonna say FC finance cost. How much the finance cost? Minus 300. Are we clear? Why? Because finance cost has an impact on my retained earnings. Understood? Yes or no? Okay. Now this finance cost, I have to pay this finance cost, meaning my liability has to be provided for. Because I am debiting my retained earnings, I have to credit my liability because I have to pay my finance cost. Therefore, I go to the top plus 300, my liability will go. Done, and thus the entire adjustment is done. The entire adjustment is 100% done. Yeah, you can go back in the exam, drink some water once again. It's very important that you keep yourself hydrated in the exam. Drink some water, come back, keep yourself hydrated. It's too hot here. No, it was raining last night. Chill, okay? And in the exam, okay, the entire adjustment is done. Akifa, just look at your colleague, just smile at her. She'll get confused. Okay, while doing the exam, you have to smile at others. Let's get them confused. Let's show them. Okay, it's easy. Okay, done. Okay, super. Now that I'm done with that, I can go to the notes that we have. Okay, are we clear? Yes or no? Are we clear? Can I? At the date of acquisition, the fair value of L's assets were equal to their carrying amounts. So the assets value, the carrying value was equal to the fair value. No problem, all good. However, L operates a mine. There is a mine. Okay. Now you get confused. Okay, mine. Okay. We have seen so many hit movies. KGF here. Okay. Operating mine. So many movies, right? So you know what is a mine. So don't try to think, okay, mine was never there in my subject. No, your examiner is going to come up with something surprising. Could be the surprise element, which requires to be decommissioned in 5 years. Okay, you have a mine, you have to remove the mine in 5 years. What is the standard? IAS 16 requires any decommissioning cost to be added as a part of assets cost, number 1. Number 2, IAS 37 requires you to provide a provision for the decommissioning cost. Okay, once again, when is this happening? This is happening at the date of acquisition. At the date of acquisition. Super. So everything at acquisition becomes relevant for our goodwill calculation. We know that. We are not going away from that. Okay. However, ELCO operates a mine which requires to be decommissioned in 5 years' time. Okay. No provision has been made for this decommissioning cost by L. There has been no provision made by L. So you have to provide. The present value discounted at 8% of the decommissioning is estimated at 4 million and will be paid 5 years from the date of acquisition. Okay, straightforward calculation. It's a very straightforward calculation. Mechanical, I know, too much of information, but if you can understand the information given, it's not tough. Let's see. L operates a mine which requires to be decommissioned in 5 years' time. No provision has been provided. Very simple. If there is no provision that they have provided, what should you do? You have to provide. You have to provide, no? Okay, so let's go and provide. Okay, let's come down. Working number 5. What is working number 5? Decommissioning cost. Decommissioning cost, when is it happening? At acquisition. At acquisition, super. Now, how much to be provided? 4,000 to be provided. 4,000 to be provided. How are you going to provide this 4,000? Debit your asset, credit your decommissioning cost. In other words, an increase in retained earnings, a decrease in retained earnings. Asset is going up, liability is coming down. Correct? There is an increase in asset and there is an increase in liability. Net impact is 0 in the goodwill. Net impact is 0. No impact on goodwill. Generally, we have to take it to goodwill, right? But here, no impact. There is an increase, there is a decrease, so it sets off. So your retained earnings will be set off. No impact in goodwill. Are we clear with that? Yes or no? Super, brilliant. Now I'm going to provide my 4,000. I go to the top. They say it's not provided. I go here plus 4,000. Are we clear? And then I have to provide a liability. I come down, decommissioning cost. How much? 4,000. Done and dusted. That's it. Done and dusted. That's it. But now that there is no impact to the goodwill, I don't want to get confused when I go to goodwill. So I can remove my at acquisition if you want to. You can remove if you want to. But if you don't want someone like me, I will just leave it because I know no impact on goodwill. I'm establishing it first itself. Okay? Super. Now what is happening? And will be paid 5 years from the date of acquisition. Okay, now, okay, hold on. There is decommissioning cost. You are adding it as a part of asset. You are adding it as a part of asset, meaning there has to be depreciation. We studied under IAS 37, Bubble Limited. We did a question called Bubble Limited. Bubble Limited invested 5 million in a power plant. Yes, and then there has to be decommissioning cost. Decommissioning cost was 4,000 and then we took the present value 3,005. We took 3,005 and we depreciated the total amount and got the answer. Same concept. So here also what is happening, there is 4 million and you are going to pay it over 5 years. So therefore decommissioning cost has to be depreciated. Now all of a sudden you think, okay, what the hell is this? No, it's simple. Whatever the accounting treatment we did earlier. We have done it. Yes, we've done it. That was one of the first questions that I did if you followed my recordings, my dear. So coming back, you have decommissioning cost done. Working number 6, depreciation. Now how do you calculate depreciation? You have 4,000 over how many years? 5 years. Now this happened at acquisition. So how many months post acquisition? 9 months, is it? 3 months. Superb. Into 3 over 12. Therefore equals 4,000 over 5 into 3 over 12 gives you 200 as your depreciation. go to the top. Very simple. Depreciation minus 200. Did we provide for the finance cost? Did we provide? No, we have provided. We have deducted it. Wait, I'll come. Depreciation. First, let's work on depreciation. So minus 200. I go to the top. And then from property, plant and equipment, what do? Minus 200. Done and dusted. Are we clear? Okay. Super. Okay. Hold on. We have provided decommissioning cost. Okay. When have we provided decommissioning cost? At acquisition. And then we have provided depreciation. That is done. So after we provide first 3 months over a period of 5 years, the standard once again IAS 37 requires you to calculate unwinding discount. Meaning you are recognizing it at present value. You have to every year charge your finance cost. Once again, this we did it under bubble limited. We did it. If you go to the question, you'll be able to understand. Every year I charge finance cost on a useful life basis. So working number 7, finance cost, or you can also call it unwinding discount. Your examiner can call it unwinding discount. Finance cost, interest, unwinding discount, cost of capital, all those are same. Don't worry the exam. So basically what is happening, your asset value is 4,000. You're going to release the discount over a period of time. In other words, 4,000 into 8% into 3 over 12, 3 months gone. Are we clear? Into 3 over 12. So basically equals 4,000 into 8% into 3 over 12 gives you 80. That is your unwinding discount. So this is for the first 3 months. After that, for the next 1 year. After that, for the second year, third year, you will keep on going until the 5th year. After the 5th year, when you are going to remove the asset, what will happen? When we remove the asset, we will credit your cash because that is the expense and debit your decommissioning cost. It would have been, in our question, it would have been 995 the finance cost. The question that we did in class. Correct? There you go, he is checking. 4,000 over 1 plus 0.08 to the power 2 or 3 if I am not wrong. 3. You would have got 3,005. 5,000 plus 3,005, 8,005. That is the total property value, and that we divided it by depreciation 26667 per annum. Covered or not covered? Covered. But where the problem is application. Okay, let's see. Now do you understand? Are we clear? Meaning every point that I covered in class will be connected. There is a reason for it. Are we clear? Now decommissioning cost, I have to provide for decommissioning cost. I'll go to the top. I'll say decommissioning cost. Guys, my dear, under workings you say DC, you say depreciation, you see FC, I don't care. But here I want you to make sure you present it properly. Below, it doesn't matter for me. Group structure, you don't have to say group structure, just say GS, that's fine. It's workings, it's your notes. It's just your support to get your answer. Okay? So no problem there. So decommissioning cost, how much do I have to deduct? I have to deduct 80. Am I clear? So I go to the top, I deduct 80. Am I done? Everybody think and tell me, am I done? Superb. What should I do next? Tell me. Add it where? Liability. For these 3 months I have a liability. So I go to the current liabilities. For this year I will add plus 80. Are we clear? Done. Meaning this entire note is done. Yes, it's quite technical. I'm not saying that. But you cannot say that this is difficult. It's technical, I know. But you have to expect these kind of areas in the exam. You have to expect. There's no negotiations there. Are we clear, everyone? Yes or no? Understood so far? All good? Can I go further? Entirely done. I'm not coming to that ever again. Darjan's policy is to value the NCI interest at fair value at the date of acquisition. Else share price at that date can be deemed representative of the fair value of the shares held by NCI interest. Okay? Why have they given you that? Why have they given you that? To calculate NCI goodwill. They are saying, okay, to calculate NCI goodwill, we have proportionate basis and fair value basis. If it's fair value basis, they have given you for fair value basis. What have they given you? 1.8. Consider this as your fair value share price. So when we come to NCI goodwill, we will look into that. No problem. Okay. The inventory of L includes goods brought from DCO for 2.1 million. The inventory of subsidiary includes goods brought from parent for 2.1 million. D applies a consistent markup on cost of 40% when arriving at its selling price. What is that? What is that? Intergroup transaction. In intergroup transaction, you have a URP. Now, working number 8, straightforward, URP, unrealized profits. It can't get simpler than. Okay. It can't get simpler than that in the exam. URP. They have directly told you. You have inventory worth 2,100 with you, for which you have charged 40% markup. Who is the seller? Parent is the seller. So very simple. Seller, parent. What is the value of inventory that you have? 2,100. 2,100 into 40 over 140. Now, don't come and tell me this is difficult. Okay, 2,100 into 40 over 140. How much? 600. What do? Eliminated. Eliminated from whom? Who is the seller? Parent is the seller. I go to the top. Parent. Where's my parent? Okay, there you go. URP minus 600. What's my next entry? Where? Inventory. Okay, what do? I go to the group inventory. What do? Minus 600. Done. Okay, let's go further. Okay, it's not done. So it's a big note. The moment you see something big like this, you get confused. Okay, let's simplify it. Now I'm breaking it. You see, I'm breaking my notes into small chunks and I'm answering. You have to get used to it. On 28th March 2016, Darjan Co. once again the parent dispatched goods to L with a selling price of 700,000. You are selling for how much? 700,000. Goods dispatched to L. Goods dispatched to L. Goods dispatched to L. Goods in transit. Goods dispatched to L. Goods in transit. In other words, I will not even read anything. I'll simply go down. I'll say working number 9. Items in transit. And I'll give you a formula. Correct? Did I give you a formula? Intergroup trade receivables. Intergroup trade receivables minus GIT minus CIT gives you intergroup trade payables. There you go. And they say goods in transit is how much? 700,000. So 700, what are you going to do? Goods in transit minus 700. Fill in the blanks. That's it. Okay. Let's read. These were not received by L. Okay, these were not received. Means it's goods in transit. One party has sent, the other party has not received. And so have not been included in the above inventory. So it's not included in the above inventory. What should you do? You have to include it. Super. At 31st March, these records showed a receivable due from L of 3 million. Okay. Intergroup trade receivables. How much is that? 3,000. And then they say this differed to the equivalent payable in else record due to goods in transit. Okay, this differed because due to goods in transit. Goods in transit we know is 700. They are not spoken about cash in transit, 0. Therefore, equal sum 2300. Eliminated. Added. It can't get simpler than this. This is simple. I don't know, someone came and told me, Zian, I spent 8 hours to do this question. The entire paper itself is for 3 hours. Like, what are you doing? Covered or not covered? Structure. You're confused with information overloaded. You're not taking what is required. You're looking for things which is not there. Correct. Okay, intergroup trade receivables. What do? We go to the top. Current assets, trade receivables. How much should I deduct? Minus 3000. Correct. And then what do I have? Trade payables. How much should I deduct from my current liabilities? Minus 2300. And then I have goods in transit. They have not added it, so I'm going to add how much? 700. Done. But technically we are not done, guys. Now there is goods in transit. Goods which is sent by the parent, not yet received by the subsidiary. Correct. Even that will have URP, right? It's within the group. So in other words, working number 10, W10, goods in transit, GIT, URP, GIT on URP. What is your GIT on URP? You have 700 into your percentage is 40 over 140. Once again, the parent is the seller, equals 700 into 40 over 140. Gives you 200. Once again, eliminated. I go to parent's retained earnings on top. URP slash GIT minus 200. And then I'll go to the top. Inventory minus 200. Done and dusted. That's it. Done and dusted. That's it. Finish. Clear? The intergroup reconciliation should be achieved by assuming that L had received the goods in transit before the year end. They have received the goods, so we have accounted for it. Entirely done. Akifa, now your friend will look at you and smile at you. Okay? Done. This is done. Let's go further. Okay, that's it then. We have just investment in associate to account. The investment in A represents 30% of its voting share capital and 30% of the voting share capital, and D uses equity accounting. Investments 30% between 20 to 50%. Investment in associate, we have to do the calculation. Investment in associate calculation. A's profit for the year ended 31st March 2016 was 6 million, and A paid total dividends during the year ended 31st March 2016 for 2 million. D has recorded its share of dividends received from A in investment income and cash. Okay, let's take it one by one. Let's take it very simply. Okay, the investment in A represents 30% voting share capital. What is that? Investment in associate. We know that. If it's investment in associate, what should you do? You have to calculate investment in associate. Correct. Working number 11. Investment in associate. Okay. To calculate investment in associate, what do you need? Investment cost. Investment cost is how much? They say investment cost is on top. How much? 4,500. Correct. So to your investment cost, you take your investment cost 4,500. To this, what will you do? You will add your post acquisition profits. So add post acquisition profit. How much is your post acquisition profit? Your post-acquisition profit, they say, is 6 million. Out of 6 million, how many percentage is yours? 6,000 into 30%. Super. So 6,000 into 30% gives you 1,800. Therefore, your investment in associate has now become 6,300. Are we clear? Are we clear? Wait, I'll come. Take it easy. First of all, do you understand that? I have taught you that, no? Okay, let's do it one by one. We are here. Until this point, we are done. And then they say, A paid total dividends during the year ended 31st March 2016 of 2 million. Meaning, associate paid dividends. Have we ever covered a particular scenario where the associate is paying dividends? Have we covered? Did we cover? Go to my tune. Under investment in associate, I said any dividends will be eliminated. I said, correct? So therefore, what you have to do is, if you have dividends, once again, working number 12, eliminate associate dividends. Why do you eliminate? Once again, because the associate profit is added to the investment in your investment in associate. Because you add it, now you will have to eliminate it. How much should you eliminate? The total amount paid as dividends is 2 million. Out of that, you have considered 30% is yours. Therefore, 2,000 into 30%. 2,000 into 30% gives you how much? 2,000 into 30% equals 2,000 into 30% gives you how much? 600 has to be eliminated. Are we clear? So, parent would have got the dividends and they say it is in investment income, meaning it is a part of your retained earnings. It is a part of your retained earnings and cash. So, you have to eliminate it from retained earnings and cash. So, I will go back. I will go to the top. It will be dividends minus 600 and then they say it is in cash. I'll go to cash minus 600. Are we clear? Understood? Akifa, what are you thinking? Akifa, are you thinking that probably when you take Kaplan, they would have deducted it from investment in associate? Here they clearly say it's bank, so take it to cash. Even if you deduct it from investment in associate, your total assets will not change, it will be the same. Understood? But take it to bank because you would have received the money. You got my point? Okay. At that point, guys, you need to understand that we forgot to take the associate here. Parent, subsidiary and associate. But we know there is no major impact there. They have not given us any details, that's why we ignore. Superb. Going back, all profits and losses accrued evenly throughout the year. Okay, that is for mid-year acquisition. There were no impairment losses within the group for the year ended 31st March 2016. Okay, now you sit in the exam and think, okay, there was no impairment, so what is the adjustment should I do? You'll confuse yourself. Nothing to do. All the adjustments, all the notes are done. Are we clear? Okay, take few minutes, quickly go through these notes. Quickly go through these workings on your own. quickly go through. Quickly go through. Are we clear? Can we go forward? Okay. Now that I'm done with all my workings, I will not look into my notes again. Next, what is my calculation? I'll have my goodwill calculation. Working number 13, goodwill on acquisition. To calculate goodwill on acquisition, number 1, I have parents goodwill, and I have ACCA goodwill. Correct? Are you clear? Parent, I take the investment cost or fair value of acquisition paid. Investment cost, we calculated it, so equals okay, so equals, I go to the top, my investment cost is number 1 32,000 plus 15,000 gives me 47,000, and then I have ACCA investments. For ACCA investments, the question clearly states that I can use the share price. The share price given to me is 1.8, therefore total share capital is 20,000. Out of 20,000, I'm acquiring ACCA 25% into 1.8 gives me 9,000. Clear? From this deduct acquired net assets. From this deduct acquired net assets. What are the net assets? Share capital. Okay. How much is the share capital? Share capital subsidiary, I'll see it's 20,000 equals 20,000. Anything else? Not capital, it's capital. Okay, anything else? I'll go to the top, any adjustments? At acquisition adjustments, nothing here. This no impact on goodwill, so nothing to worry. Depreciation, unwinding discount, URP, out. So I don't think I'll do any adjustments for my retained earnings. I can directly take my retained earnings, but retained earnings at what point? Retained earnings at acquisition. So retained earnings at acquisition, how much have they given you? They have given you on 1st of April 2015 to be 20,000. Are we clear? So my opening retained earnings is 20,000, but I want retained earnings at acquisition date. My retained earnings at acquisition should be for the year 1st of January 2016. At 1st of January 2016. But what they have given me is 1st of April 2015. So in other words, if I have to put a little timeline, it looks something like this. So my opening retained earnings 1st of April 2015, 1st of April 2015 is given. 1st of April 2015 is given. My year end is 31st March 2016, correct? So I am acquiring at this point, which is 1st of January 2016. So I want my goodwill calculation at this point. So basically they have told me 20,000 is at 1st of April 2015. My during the year, sorry, it's 19,000, thank you. It's 19,000 here. So my brought forward is 19,000. During the year, my total profit that the subsidiary is making is 8,000. Meaning, if you ask me as at the year end, we know 19 plus 8, we took 27,000 when we calculated the reserves, correct? But if I want it here, I want it April, May, June, July, August, September, October, November, December. I know you know the months, but in the exam, use your fingers, get that 9 months. It's okay. So 9 months post acquisition profit that I need, post acquisition year that I need to account for. Okay. Going back, 9 months profits. Someone is using my machine. ArivuPro, don't disturb me. 9,000 over 12 into 9, 6,750. Are we clear? Yes or no? Am I getting it right? Oh, it's not 9,000, it's 8,000, right? 8,000 over 12 into 9, correct? So I want it for 9 months, like 8,000 over 12 into 9. That gives me my 6,000. So my retained earnings at acquisition date would be 20 plus 6,000, 26,000. Are we clear? Did we get it right? Are we getting the calculation? Is it 8,000? Okay, I have taken 20,000 here, so it's 19,000. I've taken payments, okay? 25,000. Clear? Very clear? Okay. Any other adjustments at acquisition? Nothing. Surprisingly, no revaluation also. Okay, so total will be 45,000. Out of that 45,000, how many percent am I acquiring? 75%. Therefore, equals 45,000 into 75% gives me 33,750. 47,000 minus 33,750. I get 13,250 as my goodwill, that is parents' goodwill. NCI, once again, I have 25%. 25% of what? 45,000 into 25% gives me 11,250. There you go. You are confused in the exam. 2,250. What the hell is that? What is that? What is happening? I'm getting a negative figure. You go. You can check if your investment cost is correct. If you did a mistake, you go and waste your time. Very simple. Very simple. What is goodwill? Goodwill is the premium paid over and above subsidiaries net assets. For what do you pay the premium? You pay premium for unrecorded items like market value, like brand, people, all those as a value. Now let's say you have spoiled your market value. Your market share is coming down. Your market share is coming down. Your people are leaving. Your brand is deteriorating. Then if someone wants to come, will they come and buy your company? Will they buy it at a higher value? No, they'll buy it at a discount. Now for example, my phone is broken. Will they buy it paying a higher amount? No, they'll buy it at a discount or lower value. If you buy it at a higher value, premium, it's goodwill. If you buy it at a low value, we call it a purchase, but we call it a bargain purchase. In other words, you can call it negative goodwill. So we call it a bargain purchase. Okay. Now what you will try to do is, the moment you see this, okay, you start going and checking on internet what has happened. You will. But what internet gives you and what you will see in Kaplan are two different answers. Technically, in line with IFRS 10, you can't set off parents and NCI goodwill. You cannot set off. You cannot. But for the purpose of FR, when you come to SPR, we'll see how it changes. For the purpose of SPR, we are going to set off. FR, we are going to set off. So when it was positive, we added to NCI share of net assets. When it is negative, you're going to reverse it. But it's a bargain purchase. When you look at your P&L, when you take it to your P&L, you will have bought a company at a discounted price, meaning you have bought a company at a gain. You will add it to retained earnings. You will add it to your P&L. Okay. So for now, what we are going to do? Is we are going to set off against goodwill, parents goodwill, and deducted from NCI share of earnings. Okay, that is for us right now. Okay, but technically that is not permitted. If you go check internet, ChatGPT, Gemini, wherever, it will say it is not permitted. Actually, it's not permitted in line with the IFRS. But for now, let's not worry too much about it. For now, for the purpose of exam, you can set off. Are we clear? Keep it simple. Okay, now that I'm done with it, my total goodwill will be equals sum 3250 minus 2250, 11,000. Are we clear? Okay, done. What's next? NCI share of net assets. Look here. NCI share of net assets. What do I have? Share capital. How much is share capital? 19,000. Share capital is 20,000. And then at this point, I'll take my total retained earnings. Correct? My retained earnings will be equals. I'll come right to the top. How is my retained earnings? Oh, okay. Now I need a space here. So I'm gonna take some space here. I'm gonna say equals sum 34,300, 26,720, and here I don't have anything. So I come down, equals, and I connect it to 26,720, and then revaluation reserve. Do I have any revaluation reserve? None, zero. That's it. Are we done? Yes, we are done. So I'm going to take my total. 46,720. Out of this 46,720, how many percent goes to NCI? 20? 25% goes to NCI. So equals this into this, 11,680. And then you have what? NCI goodwill. Your NCI goodwill, now you are going to go and set off. How much is it? Your NCI goodwill is 2,250, which you are going to set off, equals sum. Your total NCI will become 9,430. In the exam, I want you to follow this. Very simple. Understood? Are we clear? Okay. I told you, if it's positive, well, correct. If it's negative, do the opposite. Very simple. Okay. That's done. What's my next working? Consolidated retained earnings in the exam. This will be my balance sheet figure. I'm not going to do that. Do I have revaluation? No revaluation. Done and dusted. I'm going to go to the question. Okay, let's do the question together. My investment has resulted in goodwill. How much is the goodwill? My goodwill is 11,000. I have taken. To calculate goodwill, I took my 47,000, correct, entirely. Correct? That is out. Becomes 0. And then I calculated investment in associate equals, how much is my investment in associate? 6,300 taken. To calculate this, I use my 4500 equals minus 4500. Done. Therefore, this is my total non-current assets, which is 127,800. Total non-current, you can just say total, no problem, because it's there, it is there. And then you can take here, please my dear, look here my dear, you're disturbing my class. So I take my total here equals sum, and there you go, 63,500. Therefore, my total assets will be 63,500 plus 127,800, which is 191,300. Total assets. Are we clear? Are we clear? In the exam, what I will be doing is, I will make my life easier. To make my life easier, what will I do? I will copy paste my total equity and liabilities. I need it here. What I will be doing is, I will just simply copy paste. I take my total. This is what we have been doing all these years, all this month. This is what we are doing. I'm not going to change that. And then I have my share premium done. NCS share of net assets, we calculated it. How much is it? NCS share of net assets is 9,430. Done. Are we clear? And consolidated revaluation reserve is 0. I'm done and dusted with the question. What do I have? Equals this minus sum of all this gives me how much? 37,390. Therefore, I'm going to simply take 37,390 figure here and make this 0. That's out. I have balanced the question in the exam. In the exam, that's it. I'm done with the question. But I will be doing it for you here to prove it how I got my 37,390. Are we clear? Shall we see if it is really balancing? Shall we? Super. Let's go down. Let's do our consolidated retained earnings. Techniques won't change no matter what. My techniques will not change no matter what. Techniques are simplified. I did my, I looked into my notes. I did my workings. Based on my workings, I did my finances. I did not go back to my notes. I did not confuse. Are we clear? Super. I'm going to take parents retained earnings. At this point, I need parents retained earnings. How much is parents retained earnings? Which is 34,300, correct? And then subsidiary today acquisition. Today I can get it from NCR share of net assets 26,720. At acquisition I can get it from goodwill, which is 25,000. Equals this minus this is 1,720 equals 1,720 into 75% gives me 1,290. Are we clear? I don't only have a subsidiary, I also have an associate. So my associate, I did my calculation, right? For my associate, I only need my post-acquisition profit, correct? So as my associate, I am eligible to get my post-acquisition profit. Post-acquisition profit is 6,000 into 30%, which we have already done. So equals 6,000 into 30%, or directly if I am due, what I will do is I will just connect it here. I'll just connect it there. Therefore, my total consolidated retained earnings is 37,390. 37,390. My question balances without any problem. Okay. I started at I think I've taken about 1 hour and 20 minutes, but I did a lot of talking. I didn't take 8 hours, I didn't take 5 hours, but I followed my technique approach. The approach can't go wrong. The approach is most important. You need to be very, very, very clear with the approach. I did not change anything from what I've taught you so far. Exact same thing, point to point. I can go back and show you and connect where I am connecting. Very simple. I put my group structure. I go back, take my results. That's it. After that, I go to the top, take my additions. If I take my additions, it's a matter of adding the flesh, making it whole. That's it. That's what I've done entirely. Understood? Yes or no? Are we clear? Are we clear? Sure. Okay. You know where you went wrong? You know where you went wrong? Okay. Point number 1. Excuse me. Point number 1. We will not go wrong again in these areas. Number 2. Structure, method will get you to the point where you have to get to. Okay. So this was a question that I have been getting from a lot of students to solve it. Now we have solved it. And then there was there were few more questions that they have sent students your tasks probably online or offline. They have sent, so we'll be looking at that. Let's take a short break, 15 minutes break, and then we are coming back and we are looking at another question. Tomorrow we are starting at 9 o'clock, not 9:30, so that I can give you that extra half an hour also. Okay? So I'll see you after the break. Okay.
சுத்தி பார்ப்போம். 10 ஃபுல்லா பார்த்துட்டு ஓகேனா அன்னைக்கு ஈவினிங் நம்ம கிளம்பிடலாம். இல்லைன்னா ஸ்டே பண்ணிட்டு 11 மார்னிங் கிளம்பலாம். 11 மார்னிங் கிளம்பினா பெஸ்டா இருக்கும். மதியானத்துல நீங்க வந்துரும். அகிலா வந்து மெசேஜ் பண்ணிக்கிறேன். அவளும் வந்துருவா, அது பிரச்சனை கிடையாது. நான் செப்டம்பர் 9 யாருமே இந்த பிளான் இவரை எப்படி அழுதி அவளை எப்படி அழுதி என் வாழ்க்கையில ஸ்மூத்தி குடிக்கிறது பெஸ்ட் குடிக்கிற மாதிரி நான் குடிச்சிட்டு இருக்கேன். ஐ டோன்ட் லைக் நாட் ஓட்ஸ் ஆக்சுவலி ஃபுல்லி வந்து நட்ஸ் டேட்ஸ் பனானா ரெட் பனானா ஆக்சுவலி வந்து ரெட் பனானா தான் என்னோட லைஃப்ல இருக்கு. ஸோ அதனால ஐ ஹேவ் டு கன்சியூம் ஒரு நாளைக்கு நான் 2 எடுக்கிறதுக்கே புதுசாக எழுதுறேன். ஒரு நாள் அதாவது நான் டார்கெட் பண்ணா அட்லீஸ்ட் ஒரு நாள் சாப்பிடுவேன். இப்போ இதில் வந்து இருக்கு இதில் இந்த மாதிரி சொல்லி போயிடுச்சு. ஆல்ரெடி ஒன்று எடுத்து வந்துருக்கேன். மத்தியானத்துக்கு வந்து எப்படியோ வெளியே குப்பை சாப்பிட போகிறேன் தெரிஞ்சு போச்சு. அதனால எனக்கு வந்து ஒரு மீலாச்சும் வந்து ஒரு ஹைஜீனிக்காக சாப்பிட்ட ஒரு ஃபீல் இருக்கும். ப்ரோ நான் கிட்டத்தட்ட வந்து 5 டேஸாக வந்து லிக்விட்ல தான் இருக்கேன். பல்ல உடச்சி வச்சிருக்கல கெஃபேல போய் அங்கதான் லவ் பெட் கொடுத்து வச்சிருக்கேன். கெஃபேல என்ட்ரன்ஸ்ல அந்த ஒரு மிரர் இருக்குல்ல, அந்த மிரர்ல தான் வேற லெவல் பண்ணுறோம். அங்க அப்படியே மார்க் விழுந்துருச்சு. என் மார்க் இருக்கு, காட்டுறேன். நம்ம போலாம். டைம்ஸ் நாளைக்கு இருக்கு, முன்னாடி இருக்கு. அப்ப நாளைக்கு 9 o'clock முடிச்சுட்டு இங்கே எல்லாரும் வீட்டுக்கு போயிடலாம். ஓகேவா? நாளைக்கு போலாம். கேட்க நாளைக்கு யார் வரீங்களோ வாங்கலாம். கார்ல பேசலாம். நாளைக்கு 3 o'clock வந்துடலாம். கிளாஸ் 1 மணிக்கு முடியும். 11 யோகா இங்கதான் இருக்கு. 3 கிலோமீட்டர் தான். 4 கிலோமீட்டர். இந்த பிரிட்ஜ் இருக்குல்ல, 3 மணிக்கு ஷார்ப். ஓகே, நாளைக்கு 11 ஷார்ப். நாளைக்கு பிளான் படம் நம்ம கேர்ள்ஸோட நீ சொல்றதா இல்ல, நீ சொல்றதே இல்ல, கன்ஃபார்ம். பரவாயில்ல, இங்கே இருக்கு. இங்க பாரு, ஒண்ணுமே கிடையாது. 3 மணிக்கு அந்த அங்கிள் வர சொல்லு. அவர் வரலன்னா கேட்ச் 3 மணிக்கு நானே கூட குழந்தைங்க அப்புறமா வந்து வீட்ல விட்டுட்டு வர சொல்லு. பிச்சு கூட ராஸ்கல் இல்ல, நாளைக்கு சமாளிக்கிறேன். நாளைக்கு 11 லஞ்ச் போவோம் எல்லாரும். அதுக்கப்புறமா இதோட நாங்க வந்து நம்ம செப்டம்பர் தான் மீட் பண்ணுவோம். கோழி வந்து கன்ஃபார்ம். நான் டிக்கெட் வந்து கிடைக்கிறது நாளைக்கு 11 கன்ஃபார்மா போறோம்ப்பா. கூலி மட்டும் நான் கன்ஃபார்ம் பண்றேன். நான் டிக்கெட் வந்து கேட்டிருக்கேன் 4 to 5. ஒரு வேளை அவங்க சொதப்பிட்டாங்கன்னா அந்த 31st December March
It's a reserve which is taking opening and closing balance. We took only closing balance. And for subsidy,
There is profit only.
we did learning.
I took it only.
yeah we
We
did
took only closing.
and what we did for subsidy is we time out for 3 months.
No.
We did that and we got answer.
Okay. Technically, you will get it with a debit and credit if you give any the balance.
Yeah, that's why we did minus from exchange rate because the negative.
But what has come
That's what they didn't go and come from exchange rate. Here we did.
So they will be coming from retainer.
Loss. Yes. No, they didn't do anything.
You have the couple of
They just took the total goodwill.
They have taken total
The balance sheet
அந்த ஓப்பனிங் க்ளோசிங் ரொம்ப கன்ஃபியூஷன் ஆயிடுச்சு
எல்லாம் பண்ணிருக்காங்க.
So what was my interest? Yeah, how much money?
26%.
Total. Made for the same answer.
Same answer, sir, but in the goodwill calculation.
Goodwill calculation here.
He has taken. No, not here, not here. I don't know.
No sir, what they did.
இதுவா
நான் வந்துட்டு
இதுவா?
19,000
இதுவா? Consolidated தானே?
they took the total, they time opposite the total. இந்த total தான் அவங்க time opposite
இது இதுவும் கன்ஃபியூஷன் ஆச்சு because இங்க earnings வந்து இந்த ஓப்பனிங் க்ளோசிங் எடுத்து
Wait. This also I can explain. Wait, I'll explain. Okay. What they did, you have that the data. Everything that is there, reporting date. இதெல்லாம்
Balance sheet.
பேலன்ஸ் ஷீட்ல வந்து நான் ரிப்போர்ட்டிங் டேட் எடுக்கிறேன் வர்க்கிங் டூ அதுதான் இவங்க அட்ஜஸ்ட்மெண்ட்ஸ் இவங்க என்ன பண்ணுறாங்கன்னா ஆல்வேஸ் வந்து இதுக்கும் டிஃபரன்ஸ் வந்து போஸ்ட் அக்விசிஷனை வந்து காட்டி அட்ஜஸ்ட் பண்ணுவாங்க வந்து பேலன்ஸ் ஷீட் கரெக்டாக நம்ம பண்ணுவோம் நான் வந்து இந்த ஒர்க் அப்படியே ரிமூவ் பண்ணுவேன் நான் வந்து அக்விசிஷன் எல்லாத்தையும் வந்து காட்டி குட்வில் இருப்பேன் ரிப்போர்ட்டிங் டேட் எப்படி இருக்கிறதுனா நான் நேராக ஒர்க்கிங் ஒர்க் ஆகும்
அவர் டைரக்டாவே வந்து பேலன்ஸ் ஷீட்ல வந்து ஆட் ஆன் பண்ணி இது பண்றாரு தட்ஸ் வாட் ஹி இஸ் டூயிங்
What you would have done is I told you what you would have done is you would have taken 50% of mine, you would have taken 50% of Kaplan, like you did.
Yes.
No, you can't do it.
only we following his method now only his method only
No, what we do is year-end date which we take only this year-end date profit, not the opening date.
I have told you reporting date retainer. Reporting date retainer which includes the profit and opening retainer.
Yes. What they have mentioned as reporting date.
Sir, here we are showing separately. They are not separating because they are added.
Yeah, ma, this what they have done is net assets there is an acquisition. Now only in the adjustment.
Different everything in
சார் ஆக்சுவலி வந்து செப்பரேட்டா
Actually,
பண்ணிட்டு
separate
இருக்காங்க
you understanding?
யூ உங்களோட கால்குலேஷன் தான்
The thing is logically understood. Number one, it's always easy because you will not have to go here and there. And the flow of our focus is where that is.
Here our NCI goodwill is you deducted from taxation status.
Correct.
But here you don't do it. But where is getting it?
They will have
இங்க இங்க இது இதுல
technically KHL because one day you can take another account. You are adding both investment together, right? So your salary will go up, right? So parent order and stuff like that. என்ன ப்ராப்ளம் இந்த 9000 ப்ரொடியூஷன் அண்ட் ப்ராப்ளம் கரெக்ட்டா சோ இந்த நெட் அசெட் வந்து அட்டாவது பேரண்ட் இன்வெஸ்ட்மென்ட் ஓட மேட்டர் ஆகுது தி இன்வெஸ்ட்மென்ட் will go up right so basically you will not see negative goodwill there basically अनुदान क्या लगा
Indirect it's
correct it is
okay.
basically this is But IFRS still doesn't allow me to do it. Technically, this is wrong.
But for this FR process, some excess depreciation we do
Technically
that.
it's wrong, but
For
effort we can do
presentation,
it.
we deduct the depreciation entirely from retained earnings in working into for excess depreciation. What we should technically do is we should deduct from revaluation reserves and go added back in retained earnings. But in consolidation we don't do that. But anyways it gets balanced because both are in equity. We don't need to do that
No, not required.
because presentation and
Unless otherwise you are examining a request.
but FR purpose no.
Now basically you take parents separate, NCI separate. How can you set off two different people's listing? Two different owners. So technically what will happen? Parent the goodwill 10,000, NCI on the minus 2,000, parent the goodwill 40,000. As parent you are original.
Yes, correct.
So logically you can't, that is not how we do it. Then IFRS history or we study
Yeah, I'm saying what we will write you that excess depreciation.
existing history must be able to take it to revaluation if you have fixed it up and then you can take it to rate.
But we don't do that here.
Because
So
what happens is between equity you have both linear and
that's why it
revaluation.
gets balanced.
If you can do it also it's not a problem still.
Without doing this, no problem.
Okay. So is that? So like you wanted, we have solved one of the, or you thought it is a tough question. We've solved the toughest question that you think it is. Okay, let's go back. I've been getting messages saying, Zian, can you do a question with P&L, consolidated P&L with associate? So today, I think she also requested, I've got messages, consolidated P&L with an associate.
Yes, sir. Sir, with disposal. Disposal, sir, mainly.
We'll do a disposal question also. Okay? But guys, there's something like this, okay? You need to understand, I have only 3 days. As much as possible, I'll take the toughest. I've got messages from students asking, do this. So on a 5-4 basis, I'm picking all the questions because I don't want to be unfair for students also. But in addition, if you have questions, very simple. I have told you, when you have doubts, I will miss your doubts. I have asked you to call me. The only person I get calls from her. Apart from that, nobody else is calling me. So probably I'll miss. But there were some students who had messaged and I responded. But you need to understand, guys, when you look at me as a person, I have got yesterday I cleared and brought it down to 61 last night. Today I have 183 messages. Meaning I have 183 messages students to respond. So by next week or following week, I'll have about 800-900 messages. So the volume is very high for me. Okay, I don't work on an AI robot. Okay, so it's a bit tough for me because it's not only FR for me.
And really thank you so
Audit.
much for coming, sir.
And it's yes, I decided it last week that I'm coming few days because I wanted to give you that extra support.
Please, thank you so much.
So as much as possible, I'll try to cover questions. But if there is anything that I can't cover, because here I've given this week here. Next week, once again, I have some other sessions to do. So if I can't do all the questions that you've asked me to do, you have to call me, you have to tell me, but let's make sure that it's tough questions. Okay, let's not have easy questions. If it's tough, I got another request last night, someone had messaged me. You wanted a question to be done. I said yes, I can accommodate it because already when I came, I have time to do about 8 to 9 questions during my marathon because I'm looking at a entire past paper question. So one particular question I had a slot to do, so he messaged me, so maybe I can at least take you through the workings. That question, not only you, there were few students who had messaged me. So yes, I can take you through the workings. He said, okay, it's challenging. I got some messages. So like that, I've tried to squeeze in everything possible to give you that mileage. Okay. But in addition, if you have really tough questions, I've been added to the group. Send it to the group. Your friends will resolve it. If not, I'm here to resolve. We will connect online. Okay. I know last 2 weeks I've been there, entirely occupied. But now I'm making sure once I'm done with marathon individually here and there, I can combine all the students together and work around additional questions. Okay. And let me tell you, Sri Lanka is giving you a good competition. Okay. In terms of FR, there we have some really you're smart, but I've got some really smart. You know, right? We had World 1, 2, 3 last year. You would have seen all here. So you would have seen a poster here, Nafla. Yes, she was a very recent world number 2. Now she's in Qatar. There is someone who is smarter than her in the class. I don't know why girls are smart, to be very honest. You see all the world 1, 2, 3. Guys, it's the girls, guys. I don't know why. Sometimes I wonder, what are we even doing? It's the girls that is scoring world 1, 2, 3. For a change, maybe this time, maybe a boy might, but there's a very smart girl in the class. Smart. She's very good. So, let's see. Okay? But you have good competition, I'll tell you that. In total, I think there's about 145 to 50 students sitting for exams. FR only. So that's quite a lot. Here, all of you are sitting, right? You're sitting? Apply. How are you finding?
Still in confusion. I couldn't complete any single mistake without any assistance. I'm still practicing.
Did you check the recordings?
Yeah, I mostly do frequent recordings.
Okay, now guys, at this point in time, it is only practice that's gonna help you to crack. Practice, past papers. That's it. Okay, superb. Now guys, going back, if you look at what we've been doing all these days, I've completed Moby, Kingdom, Dobry, Sotar, number 5. We completed Dargent. Okay. Now going with the flow, I was asked to do a consolidated P&L, okay, which most students asked me to do. So there is this question which I saw called pink. Anybody done it? Oh, is it pink? Oh, what was that? No, you were just having something when I walked. Gold. I'm sorry, gold. So I've got messages from students asking me to do gold. So I will do gold now. And what do you want me to do? Okay. The thing is, I have to take up the majority on a 5-4 basis. I got gold. Okay, Laurel is a problem. We will look at Laurel also. But what we have planned for today, because I've got the messages, I have gold to do. Either I do the gold or I have to go back and ask some students because they have already messaged me. So I have told them I will do it.
Okay, sir.
So maybe I will do gold, and then if time permits today itself, we'll see if we can do Laurel. But in Laurel, if you have any adjustments that you're struggling, drop a message. I will try to first help you like that, and then we will do the question together. Okay. Having said that, you have to be very careful in terms of financial statements analysis. Financial statements analysis is a major area in your syllabus, and you got to make sure that you are confident and you make sure you have done enough and more questions there. So my marathon is primarily will be focusing on that also. Okay, so I'll be coming back to financial statements analysis. I've got some messages from students in terms of analyzing financial statements. I've got about 2 questions that they have sent me. I'll be looking at these 2 questions also. So my plan is originally today to do gold, tomorrow to look at 2 ratio questions, and Thursday to do an entire mock with you.
Okay.
in between you have doubts, look, I can't do everything. In between you have doubts, like how I came to you, you can come to me. Okay, no problem. So let's go back.
Hopefully first day first work.
Let's let's go back. Let's go back and look at gold. Okay. So go to your notebook. You can say gold, and we can start working on gold. Okay. I think the most confusing part of gold was most students sent me was the loan notes. They got confused with loan notes. So there is a loan note adjustment that they got confused. So we will entirely do it together. Okay. Can we? Okay. So coming back, guys, requirement like this is very popular in the exam. I see this as a very popular area by the examiner, where the examiner wants you to calculate goodwill plus consolidated P&L. So the requirement is to do the goodwill, number 2, do P&L, consolidated P&L. Okay? Done this before? No? Okay. Anybody tried? Tried. Okay. Right? Agiva? No. Okay. Fine. Let's do it. Anyway, when you take questions, maybe some of you would have done 1 or 2 questions. Okay. So it's very difficult to pick a question where nobody has done it. Okay. Anyway, going back, it's a very common requirement, and I believe this can be one area which can also be tested for us, right? So to make sure that we have covered entirely throughout everything, let's tap this also. Calculate the goodwill arising on acquisition of Silver Co. And number 2, prepare the consolidated statement of P&L for Gold Co. for the year ended 30th September 2012. Okay, now the thing is, guys, when you get a requirement like this, I want you to start off with part B first and then do part A. Don't do part A first. Do part B first and then let's do part A. Okay? Right. Now, there has been a small change, a slight change in how you present your financial statements. There has been a change. Now, we had all these days we had IAS 1 presentation of financial statements. Now we do not have IAS 1 anymore. Instead, IAS 1 is updated as IFRS 18. IFRS 18 comes into place. IFRS 18 comes into place with five primary headings. IFRS 15 says, hey look, IFRS 18 says, hey look, everything can be categorized under 5 headings, because to make comparison of financial statements and understandability of financial statements easier. So what I will be doing is, as I am doing this, I am trying to incorporate IFRS 15 and show you how IFRS 18 and show you it's a new standard, right? So even for me, it doesn't come like that. So I am trying to bring in IFRS 18 into the picture and show you slightly what are the changes. Content can't go wrong. Content wise there is no difference. Presentation wise there is a difference. Are we clear? So if you ask me, okay Zian, all what you have taught becomes irrelevant? No. Everything is relevant. But how we are showing it is going to change. So it's going to change in terms of P&L, cash flows and consolidation. If you ask me financial position, no major changes. Okay, but anyway, can I give you a list of changes for you to make things easier? Okay, I'm going to give you a little overview and then we're going to start off with this question, because the objective for me was, when I'm doing this P&L, to connect it there. Okay, so you can go to your notebook, say IFRS 18 changes. IFRS 18 changes. say IFRS 18 replaces IAS 1 presentation of financial statements entirely. Same. Done. IFRS 18 replaces IAS 1 presentation of financial statements entirely. Okay. IFRS 18 provides the following guidelines. IFRS 18 provides the following guidelines for presentation of statement of profit or loss. Okay, below that say IFRS 18 provides five distinct categories, distinct categories, distinct categories, to present elements in the financial statements. Okay. Now guys, what does IFRS 18 do? IFRS 18 does, okay, in terms of presentation we are going to change. It says, okay, whatever you presented hereafter, how you presented hereafter will be slightly updated. How are you going to update? You are going to update it with 3 headings, primarily 3 headings. For statement of, 5 headings. There will be 5 categories. What are the 5 categories? Number 1, you will have an operating category. Number 1, an operating category. Number 2, you have an investing category, just like your cash flow statements. Number 3, you will have your financing category. Number 4, you will have your income tax category. And number 5, you will have your discontinued operations category. Meaning, you are trying to simplify the presentation of financial statements under these headings. Are we clear? So under operating category, you will take everything that is a part of your operations. Investing, whatever you are investing. Financing, how you are financing. Income tax is your taxes. And discontinued operations, if there is any discontinued operations, you will take it under that. So it's separate. So primarily what they are bringing in is, they are bringing in 5 categories to reclassify what you are presenting. Are we clear? That is the first change. A. Number 2, B. The second change that they are bringing in is, they are bringing in mandatory 3 subtotals. 3 mandatory subtotals. They have 3 mandatory subtotals. Meaning they are saying, okay, these 3 subtotals is a must. You got to make sure whatever you ignore in terms of subtotal is fine, but these 3 is a must. What is it? Number 1, operating profits or losses. Number 1, operating profits or losses should be there. In other words, in line with your operating category, you will have an operating profit or loss. Number 2, you will have to show profit before financing and income taxes. Profit before financing and income tax. Okay, now basically what they are saying is, hey, look, under here you are going to show a subtotal. After that, profit before financing and income, here at this point you are going to show a subtotal. Are we clear? Understood? Number 3, third category, profit or loss for the year. Profit or loss for the year. Okay, now what is the difference? We had gross profit. Gross profit is removed. Meaning it's not a mandatory requirement. If you want to present, you can present. Meaning it is not a mandatory requirement. If you want to present, you can present. Are we clear? So what is removed? Number 1, gross profit margin is removed. Are we clear? And number 2, what is removed is profit before tax is removed. Profit before income tax is not there. But still, if you want to remove, if you want to show it, you can show it. These are primarily as a part of your statement of profit or loss. Okay, but I want you to put a big asterisk. Put an asterisk. Now guys, where there are common items. Now for example, you take impairment. Now if it's impairment, you can't go and show it as a part of your general expenses. You don't just put all the expenses like under admin, like distribution, not like that. You take it, you try to take it under the required headings and show it separately. Say aggregation and disaggregation principles. Aggregate and disaggregate, aggregation and disaggregation principles. Say IFRS 18 requires aggregate items with shared characteristics. Aggregate items with shared characteristics. Aggregate items with shared characteristics and disaggregate those that don't share characteristics. IFRS 18 requires, what did I say? Aggregate items with shared characteristics and disaggregate those items that do not share characteristics. For example, impairment. Should be shown as a separate item. And cannot be included as a part of general expenses. Okay? Put a big asterisk and say, in the FR exam, examiner will request or examiner will indicate where to present these items. So your examiner will tell you where to present. So based on what your examiner has said, you are going to present. Okay. In summary, if you take our exam, how many sections do you have? 5. Our exam has how many sections? 3 sections, not 5. IFRS 18 has 5 sections, okay, for P&L. Our exam has 3 sections. So we have section A and section B. If you ask me, no impact. IFRS 18 will not have any impact here. Or in other words, to be on the safe side, I'll say minimum impact. Minimum impact. Especially the terminologies can change. Okay, there can be terminological changes. But if you ask me in terms of presentation, we are not going to do much there. But summary, section B of course has changes. Section B has changes. If you take, section C has changes. If you take section C, that's where we do the construction. So statements must follow IFRS 18 formats. IFRS 18 must be followed. Must be followed. Are we clear? Are we clear? Okay. Clear line and say ROCE and interest cover. ROCE and interest cover. ROCE and interest cover. Now uses profit before financing and income taxes. Now uses profit before financing and income taxes. Profit before financing, ROCE and interest cover. ROCE and interest cover. Now uses profit before financing and income taxes. Okay, now previously we had operating profits. Now we call it profit before financing and income taxes. But here there is a small catch. Continue, continue, say. Operating profit margin must not be used if investment income is included. Operating profit margin must not be used if investment income is included. Investment income is included. Now guys, any investment income, if you have invested in share market or if you have invested in bonds or anything, all those will have to go under investing income directly. The classification has changed. Are we clear? Are we clear? Okay, now based on this, we will try to see how we can work around our answers. Okay? So, I think there was, wait, let me see if I can get you a structure also. Okay, so there is a template. So let me quickly take you through the template also. Okay, right. So how will the new template look like? This is how it's gonna look like. Okay. Now guys, what will happen is the name of this question was Dargent. Now I'm going to give you IFRS 18 template, okay? Now we will not call it consolidated statement of profit or loss. In other words, we'll call it consolidated statement of financial performance. Performance and position, that's going to change. So we'll say consolidated statement of financial performance for the year ended whatever 31st December 2012. Okay, so P&L is replaced as financial performance, okay, and there the balance sheet is financial position. Okay, so below that we are looking at statement of profit or loss. We will say number one, category income and expenses from operating activities. Are we clear? So our operating activity, we are showing our operating activity separately. Okay, below operating activity, what do you have? Revenue, cost of sales. Are we clear? So you will take your revenue, you will take your cost of sales. Are we clear? Revenue and cost of sales, done. Now here I know it's gross profit, but it's not a mandatory requirement. Gross profit used to be mandatory, but it's not a mandatory requirement anymore. So if you want, you can present it. If not, you can simply ignore it, no problem. Are we clear? Now this is my operating activities. I'm gonna show after that if there is any other operating activities. As a part of my operations, if I have any other operating activity. So if there is any other operating activity, other operating incomes, I'll show it separately. Are you clear? So if there is any other operating income, I'll show it separately. So as a part of my operating activities, what I will try to do is I will now take my operating expenses. So operating income done. Now I'm taking my operating expenses. If there is any selling expenses, I'm going to take my selling expenses. Any research cost, development cost, if I have, I'm going to take it separately. If I have any general admin expenses, I'm going to show it separately. If there is goodwill, I'm going to show goodwill impairment separately. And any other operating expenses, in the exam, your examiner will say how to classify it if there is any. So once I'm done with this, I'm going to show my operating profits. In other words, what did I tell you? I told you for operating income and expenses, we are showing it separately. This is my operating structure. All this is a part of my operating heading. Are we clear? I'll come. Are we clear? Yes or no? Are we clear? Yeah, if there is any impairment, correct. Huh? Acquisition you can't have now. Further, any impairment will be taken here. No problem. So that is done, and your examiner will tell you if your depreciation is going to go to cost of sales or not. Based on what your examiner says, you will classify. Your examiner will tell you where to put it. Now this is the structure. You need to know the structure. Okay. Now when we looked at our structure, we saw our operating activity that is done, and then operating activity is our main activity, right? And then we have our investing incomes and expenses from investing activities, income and expenses from investing activities. If you made any investments, all the incomes from your investments and expenses can be taken here. So in other words, your associate, if you have invested in associate, your share of associate's profit will come under this. Share of associate's profits will come under this. And if you have any other investment apart from this, any other investments can come under this. Are we clear? Are we clear? If there is any expenses, you can take it here. So this is our second heading, which is our investing activities. Understood? So if you want, let me take it. So any expenses, there you go, and operating profits or losses can be taken there. Are we clear? Then I have my share of associates profit. I'm going to take it here. Any other investment income, if I have it, I'm going to take it here. Any expenses I will set off. Once I'm done with that, now I have my mandatory requirement, mandatory heading, profit before financing and income taxes. This is my mandatory heading. So then I bring in my mandatory heading, profit before financing and income taxes. Now basically I will be taking my profit before financing or investment, this thing, like how I showed my operating profit here, my mandatory total. This is my mandatory total, correct? And this is my second mandatory total. So I'm going to take it over here. So out of my 5 primary heading, how many have I covered? 2 I have covered, correct? Number 3, what is my third heading? Income and expense from financing activities. So number 3, income and expenses from financing activities. So if you take income and expenses from financing activities, finance, your financing meaning you have probably borrowed, you have gone for a lease, you have your lease interest, lease liabilities interest. So you can take your finance cost. Finance cost is replaced as interest expense. Interest expense, it is not finance cost. We are going to say interest expense on borrowings and any lease. We can take separately. Pension liabilities and any pension liabilities is not there as a part of your syllabus. You can simply ignore it because for now we don't need it. So that is my third expense category, which is my income and expenses from financing activities. Are you clear? Okay. Now comes now I have my income tax. So here profit before income taxes, profit before income taxes is here. Okay. Now I have my income taxes. So I can call it income tax adjustment, income tax expense. This is another mandatory heading, correct? That's my fourth heading. Fourth mandatory heading is income tax expense. So I take my income tax expense. I'll take my income tax expense here separately. There you go. And once I'm done, I will call my heading profit for the year, but this is from continuing operations. We call it continuing operations. I told you 5 headings. How many headings I have covered? This is my first heading. 1, 2, 3, 4. 4. So I have one more to cover, profit or loss from continuing operations, and then discontinued operations loss. Loss from discontinued operations. This is my 5th heading, number 5. I'm gonna present it separately. Are we clear? And finally what will happen is I'll have my profit for the period, which was known as profit for the period, is now known as just profits. That's it. If it's loss for the period, is now known as just loss. Are we clear? Understood? This is my presentation. Sorry? If you have okay. Sorry? If you have any gains on disposal, generally your examiner will tell you, but you have sold, so we can bring it under investing. Are we clear? Or non-current assets which we have sold. Okay, now primarily all your answers has to come under these headings. We will see how to work around the question under these headings.
For the OCI thing, other components.
I am coming there. So, statement of other comprehensive income, the name is changed as statement presenting other comprehensive income. Statement presenting other comprehensive income. It's not statement of other comprehensive income, statement presenting other comprehensive income. We call it statement presenting other comprehensive income. Okay, directly if there is any revaluation, you can directly take it over here. Other comprehensive income net, you have it here, therefore total comprehensive income. You will take your total here. Are you clear? Are we clear? Okay, this is one major change. This is one major change that we have. Okay, sometimes if you see, you may not have got any questions, or hardly you see questions that is taking this into account. So, as much as possible, if you can try and match it in the exam, your fine examiner understands is the first sessions. So, 1 or 2 sessions. This is a must. This is how it has to be presented. But let's try to, as much as possible, bring it under these headings. Okay, super. Now going back to the question, we have gold. Okay, we know the requirement: calculate goodwill and then prepare statement of profit or loss. Okay, as always, as always, I will go to my statements. I will leave about 40-50 lines. Workings and working one, group structure that will not change. Working one, group structure that will not change. Are we clear? Yes or no? Are we clear? Okay. So let's read the question together. Okay. On 1st of January 2012, Goldco acquired 90% of the 16 million equity share capital of Silver Co. Okay, now you have Gold acquires 90% of Silver. Gold is the parent, Silver is the subsidiary, and then we have how many percent NCI? 10% NCI. Are we clear? Yes or no? Are we clear? Done and dusted. Okay. Now that I'm done with it, on 1st of January 2012, I am acquiring, my year end is 30th September 2012, so therefore it is going to be a mid-year acquisition. So I have identified it. I'm going to say mid-year acquisition. There you go. Done. I don't have reserves when it comes to P&L. Therefore, my next step would be directly do the additions, but I have to time a portion for how many months? Jan, Feb, March, April, May, June, July, August, September. For 9 months, I'm gonna do the time apportioning. Alright, so let's do the time apportioning together. Look here. I'm gonna go to the top. Give me the heading. Sorry?
Statement of consolidated statement of financial performance for the year ended.
Gold Co's consolidated statement of financial performance for the year ended 30th September 2012. Examiner will be impressed. Okay, now how do I name it? We need incomes and expenses from operating activities. Okay, we can say income and expenses from operating activities. Income and expenses from operating activities. I need my revenue and cost of sales. Are you clear? My revenue will be equals 103,360 plus open bracket 60,800 into 9/12. You're going to do the segregation here itself. Cost of sales equals 81,920 plus open brackets 41,600 into 9/12 gives me gross profit, but gross profit is not a mandatory line item, but you can put it if you want. No problem. There is no problem there. Gross profit. Are you clear? Right. Now, what is happening? Gross profit done. If we have any other operating incomes, I'm going to take operating incomes, but I have operating expenses. So I'm going to take operating expenses. Are we clear? Under operating expenses, what do I have? Distribution cost, administrative expenses, done. And then I have investment income that will come separately. Correct? So my distribution expenses is equals 2560 plus open brackets 2980 into 9, right? Into 9/12. Okay, that's done. And then what do I have? Admin equals 6080 plus open brackets 3740 into 9/12. Correct. Done. Okay, my operating expenses are done. Now what do I have? All my operating expenses are done. I can take my operating profits. Operating profits. Are we clear? Are we clear? Done. Next, what I can do is I can take my investment income and expenses from investing activities. So income and expenses from investing activities. If you take income and expenses from investing activities, I have an investment income. If I have any associate, then share of associates profits. Are you clear? Done. And then I will take my, okay, how much is my investment income? My investment income is 800 equals 800. And then what do I have? I have my finance costs. So my finance cost, I'll say profit before finance and financing and income taxes. So I'll have it here, profit before financing and income taxes. Okay? The reason Kaplan is like this. Okay. I have not checked. The question itself is like that. Oh, okay. The question is like that. Okay. I haven't checked. So I'm doing it correctly, right? Just if possible, share the reason for me to have a look at it. Because I directly looked at the standard. I haven't looked at Kaplan yet. Okay, so profit before financing and income taxes. So in the question they are showing it separately, yeah? They're showing it separately. So it's updated. Ah, okay. So what you have is 24, 25. So that is not updated. Is updated. It is released. I want to have a look at it. No, technically the content can't go wrong, you understand? The heading for me to have a look at it, because I directly went to the standard. I do not know how they are doing it. Okay. So profit before financing and income taxes. After that, what do you have? After that you have your income taxes. Okay. Now going back, now you have your income. No, this is done. No, finance cost is done, is it? Okay, we have finance cost. Yes. Income and expenses from financing activities. It's updated. Income and expenses from financing activities. Okay. Now below that, what do you have? You have your finance cost. Is being now known as interest expense. Brilliant. So I have equals 672. And then what do you have? You have your income taxes. So profit before income tax and then income tax. So profit before income tax and then income tax. Your income tax is 4480 plus open brackets 2560 into 9 over. Okay, there you go. We have got to IFRS 18. Are we clear? Super. So, well, no matter what, my dear, our content will not change. Our content will not change. How we approach, our approach will also not change. Our approach is the same no matter what. So, coming back, my line by line addition is done. Now I can go and read the question. Okay. Okay, super. On 1st of January 2012, gold acquired 90% of the $16 million one equity share capital of silver. Gold issued 3 new shares in exchange for every 5 shares it acquired in Silver Co. Additionally, Gold will pay a further consideration on 31st December 2012 of 2.42 per share acquired. Gold's cost of capital is 10% per annum, and the discount factor at 10% for 1 year is 0.9091. As at the date of acquisition, shares in Gold and Silver had a fair value of $8 and $3.5 respectively. I think the dollar mark will be changed very soon, and the BRICS marks will come in, no? Looking at what is happening right now. So, let's see. Anyway, coming back, it's a very straightforward thing. We've looked at this so many times, and for the last time, let's do it together. Okay. Now, super, what is happening? There is investment cost. Working number 2, investment cost. Okay. For the investment cost, how many types of investment do they have? 2 types. Number 1, share exchange. Now, in terms of share exchange, what they are doing? 16 million shares. Out of 16 million shares, you are acquiring 90%. So, 16 million into 90%, and you are going for a share ratio of 3 for 5 into 3 over 5. And for every share, you are going to pay how much? You are going to pay 8. So you are going to pay $8, therefore into 8. So equals 16,000 into 90% into 3 over 5 into $8 gives you 69,120. That's your investment cost. Now I'm doing P&L. I'm not going to waste time showing investment cost or anything. I think the only reason why they have given me is to calculate goodwill. So I need this for my goodwill. So I'm not gonna waste so much of time trying to worry about it. I'm gonna go for the share exchange done. Number 2, there is deferred payment. Once again, they say Gold will pay a further amount on 31st December 2012. You acquired on 1st of January. 31st December means 1 year. 2012. 2.42 per share acquired. Okay, for every share that you are acquiring, you are going to pay 2.42. Okay, so basically you are acquiring 16,000. Out of the 16,000 shares, 90%, you are going to pay 2.42. Correct, 16,000 90% into 2.42. Therefore, equals 16,000 into 90% into 2.42. 34,848. Okay, looks strange, fine. Gold cost of capital is 10% per annum. The discount factor at 10% is 0.901. They have given you the discount factor directly. If not, future value over present value equals future value over 1 plus r to the power n. You know it. Okay. So basically, since I have 34,848, they have given you the discount factor 0.9091. That gives you equals this into this, which is 31,680, which is my investment cost. Therefore, total investment cost for goodwill will be this plus this 100,800. 100,800 is my total investment cost. Done. So you are acquiring on 1st of January 2012, your year end is 30th September. So there is a deferred payment. So for this deferred payment, what are you going to do? You are going to calculate finance cost. So there is finance cost. So next what we are going to do is finance cost. Working number 3. Finance cost. Okay. What's your present value? Your present value is 31,680. Correct? 31,680 into your finance cost is 10%. Am I done? For 9 months. So equals this into 10% into 9 over 12 gives me 2,376 finance cost. Debit finance cost, credit interest payable. Okay, so basically I'm going to go to the top. my interest plus how much? 2376. Done and dusted. Are we clear? Everybody, are we clear? I'm not changing anything, exact same thing what I have taught you so far. Let's go further. That is done. Entirely this working is done. Entire working is done. Correct? Entire working is done. Now I have my statement of P&L done, nothing to worry. At 1st of October 2012, the retained earnings of Silverco was 56 million. 1st of October, your year end is 31st September, so meaning 1st of October 2011, last year, you are acquiring on 1st of January 2012, there is a catch. There, correct, there is a catch. You will get caught there, right? We did it. Even last question was the same question, was very similar. You should be able to time apportion that. Done. Now that is relevant for our goodwill calculation. So what I would do is, okay, working number 3, retained earnings required for goodwill, time apportion, so that I don't forget. Now guys, in the exam, as and when you want, you can have small notes for you to always come back and check. Okay? Number working 3 done. Working 4. What do they say? Working 4. At the date of acquisition, the fair value of Silverco's assets were equal to their carrying amount with the exception of 2 items. An item of plant had a fair value of 2.6 million above its carrying amount. Okay, at acquisition. The remaining life of the plant at the date of acquisition was 3 years. Depreciation is charged to cost of sales. What does the Kaplan question say? The new question? Same thing. Same thing. So directly giving you value charging. So number 1, there is what? Revaluation. How much is revaluation? 2600 revaluation. When is this happening? At acquisition. So it is relevant to my goodwill calculation. At acquisition, so it is relevant to my goodwill calculation. Are we clear? Understood? Okay. Now, out of this revaluation, there is additional depreciation. There is depreciation. How much is depreciation? They say for 3 years, right? You are using it for 3 years. Therefore, 2600 over 3 into 9 over 12. So equals 2600 over 3 into 9 over 12, which is 650. 650 they want us to charge it to cost of sales. So I go to the top, cost of sales plus 650. Done. Are we clear? Okay. Done. Silver had a contingent liability which Goldco estimated to have a fair value, of 850. This has not changed as at 30th September 2012. So silver had a contingent liability. Now working number 6, there is a contingent liability which has to be provided. Now last question together, so no impact on goodwill here. It will have an impact on goodwill by only contingent liability. So contingent liability at acquisition, 850 to be provided. Okay, important point. Okay, now at acquisition, listen to me very carefully. At acquisition you had 850. This has not changed. If your examiner says that it has changed, meaning if it has gone up or if it has come down, if it has gone up, your expenses are going up, your liability going up, your expenses going up. If it has come down, your liability coming down, there is a gain. Only if your examiner mentions anything, there will be an impact in the P&L. Right now, the impact is only in your goodwill. Are we clear? Because they say had a contingent liability of 850, which has to be taken, but this has not changed, meaning it is there. If it has changed, then you will have to go and make a note. No problem. What? Yeah. Well, you have to check. Basically, when they say here, okay, now she is saying in line with IAS 37, contingent liability is only disclosed. They actually refer it to a provision. It's a provision. When they say they have estimated they have a fair value of 850, they have not changed. You have to show it. They have already recognized it. It's just that there is no movements in it. If there are movements, then you will have an impact in your current year financial statements. So all what is going to happen is you are going to 850 you are going to provide it, but you are going to provide it for acquisition. If there is any changes only, it will have an impact in our P&L. Clear? There is no fair value changes. Okay, done. Let's go further. Goals policy is to value and change the fair value at the date of acquisition for the purpose Silver's share. Goals share price at that date can be deemed to be representative of the fair value of the shares held by NCI interest. I'm not going to even look at it. I know what it is. What am I going to do? I'm going to take my NCI interest for my NCI goodwill calculation. That's it. Are we clear? Okay, going forward. Sales from gold to silver. Gold is the parent, so gold is selling to silver. Working number 7. Intergroup transaction. Okay, sales from gold to silver in the post-acquisition period had been consistently 600,000 per month. 600,000 per month for how many months? 9 months. Now how many months gone? 9 months gone. So in other words, 600 into 9, which is going to be equal to 600 into 9, 5,400 eliminated from sales and cost of sales. Eliminated from sales and cost of sales. Clear? I go to the top. Sales minus 6,400. 6,400 or 5,400? 5,400 minus minus 5,400. Are we clear? Done. Gold made a markup on cost of 25% on these sales. Silver had 1.2 million of these goods in inventory as at 30th September 2012. So that is going to be URP, unrealized profits. Working number 8. Working number 8, URP. Who is the seller? Parent is the seller. Parent is the seller. Are we clear? Parent is the seller. What is happening? You have inventory worth 1.2 million, 1,200 into 25 over 125. So equals 1,200 into 25 over 125 gives you 240. Are we clear? Now who is the seller? Parent is the seller. Eliminated from seller's retained earnings, seller's profits and inventory. Now inventory means you're going to go to the top. Cost of sales, what are you going to do? At 240. Next, gold's investment income. Gold's investment income. Gold's investment income is a dividend received from its 40% owned associate, which it has held for several years. The associate made a profit of 3 million for the year ended 30th September 2012. What do you have to do? Associate share of profits. Working number 9. Associates share of profits. How much is the total profits? 3,000 into 40% into 9 over 12. No, because you have been having it for several years. Now what students do is they go and apportion this. Don't mess up in the exam. But if you have purchased it during the year, then yes. Associate has been there with you for a very long time. So equals 3,000 into 40% gives you 1,200. Okay, I think our group structure is going to change. 40% associate. So I go to the top. I go to the top, what will happen? I go to the top, associate share of profits equals, I'm gonna add 1200. But they also say that we have received dividends. What should happen to the dividends? Eliminated it. Okay, go down. Working number 10. Working number 10. Eliminate associate dividends. How much is associate dividends? Investment income shows it entirely, so meaning 800. 800 eliminated. 800 eliminated. Are we clear? Are we clear? I go to the top. Investment income minus 800. Understood? Yes or no? Understood? Yes or no? Entirely. Point to point, everything is covered. Yes or no? Everything is covered entirely. So we are moving on. We are moving on. Working 9 done, and then we are going on. Gold score investment income is a dividend. We did that. We did that. We did that. And then finally, point number 6. Point number 6. Examiner surprised us with loan notes. So let's see what is happening. On 1st October 2011, what's your year end, my dear? 30th September 2012. So that means 1 year back. Goldco issued $100,000 6% loan note at par value with interest payable annually in arrears. Over a 5-year term, the equivalent rate for non-convertible loan note was 8%. Goldco has recorded the loan note as a liability at par value and charged annual finance cost 6% interest to finance cost. What has happened? What has happened? What has happened? They issued a convertible loan note. No problem. Okay, simple. Working 11. Convertible loan notes. Okay. Sorry?
You have to find the equity component.
Superb. Superb. What they have done? Look here. They have recorded the loan note as a liability at par value. How do you record it? What is the recognition criteria for present value for convertible loan notes? Convertible loan notes. Convertible loan notes. Convertible loan notes. There you go. IFRS 9. Did we cover? And IFRS 9. There you go. Convertible loan notes. Initial recognition is at convertible loan note is at present value. So what they have done? What have they done? They have just recorded it as. See, the standard requires the cash flows to be discounted at present value, given entirely the note. So what should you do? You should have recognized that present value. You did not recognize it at present value. You recognized it at par value. So what is your par value? Your par value is 100,000. So loan note is at look at the catch there. What your examiner has done. No. Your examiner has made or put a little trick there. What has he done? What is the total value of loan that you are borrowing? How much is the value of the loan? What is the value of loan notes? What is the value of loan notes? Exactly. See, now we close our eyes and took 100,000, right? It's not 100,000. It is 100,000 into 100. Generally, examiner will give us the value, but here he has not given us the value, the total value. He wants us to calculate a trick. So equals, it will be 100,000 into 100, correct? So equals 100,000 into 100 gives me 1, 2, 3, 10 million. But I am working it to 1000, so equals this divided by 1000. It's 10,000. That's the value. If we work with 100,000, we mess up. You know, we are so used to getting figures like that, we can mess it up in the exam. You have to be careful. You have to be really careful. Okay. Now we have to recognize it at present value. How many years? Years. How many years? 5 years. Year 1, 2, 3, 4, 5. I know you can use the annuity factor, but I want you to directly use this. What we have studied. This we have the cash flows and then discount factor at what percentage? Super 8%, and then we have the present value. Cash flows. I'm getting 10,000. How much is the annual interest charge? 6%. Equals 10,000 into 6%. 600. Second year 600. Third year 600. Fourth year 600. Last year 10,600. Discount factor equals 1 over open brackets 1 plus 0.08 to the power 1. First year, second year, third year, fourth year, fifth year. Sorry? Yeah. Coming there. Don't worry. 2, 3, 4, 5. Are you clear? Now you take the present value. I know you can use the annuity factor, but let's do this. No problem. What's your total? Your total will be recognition value 9,201. This is your loan recognition value. Your loan receipt value is how much? 10,000. Therefore, there is a difference of this minus this. You take it to equity. Okay. Is that the problem now? No. The problem is on 1st of October 2011, gold issued 100,000 equity. Okay, 100,000, $100, 6%. Okay, why doesn't this work? Okay, whatever. 100,000, 6% loan notes at par. With interest payable annually in arrears over a 5-year term, the equivalent rate for non-convertible loan note was 8%. Gold has recorded the loan note as a liability, so meaning at par. Recorded at par, meaning at 10,000. And for this 10,000, they have charged interest of how many percent? 6%. So interest charged 6%. Is it correct or incorrect? Incorrect. Your interest will be charged on what value? Effective rate, but what is the loan recognition value? 9,201. Therefore, you would have charged this into this 6%, which is 600. But actual charge should be what? Your loan is 9,201 into 8%. Your actual charge should be this into this. Meaning 136 you have undercharged. Therefore equals this minus this. You have to provide another 136,000 to charge. Are we clear? 136 has to be extra charge to the PN. So our finance cost, I'll go to the top. Our finance cost will go up by 136 point. That's it. Done. and then we have NCI share of profits, NCI share of profits, parents profits, and then we have goodwill to calculate, and then we have goodwill to calculate. So if we want, we can directly take our answers equals this minus this 39,450, and then my operating profits will be 34,950 minus 4795 minus 885 gives me 21,270, and then profit before, can I take it here? My profit before financing and income taxes would be 21,270 plus 1,200, and then I have my interest expense 22,470 minus 3,184 19,285 or 286, and then I have my income tax, and then I have my group profits. My group profits will be equals this minus 6,400 12,886. Now I need to calculate my NCI share of profits and my parents profits, and then I also have goodwill to calculate. Right here, my NCI share of profits will be my next working. So I go down, working number 13, working number 12 actually, in fact, working number 12, oh where is that? Working number 12, I have NCI share of profits. To NCI share of profits, what do I need? I need subsidiaries profits. How much is subsidiaries profits, my dear? My subsidiaries profit is how much?
9,920.
Super, 9920 into 9 over 12. I need for 9 months, correct? So that is going to be 7440. And to this I do my adjustments. What are my adjustments? Anything in terms of subsidiary. Okay, so associate share of profit is out, URP is out because parent is selling, intergroup transaction is out, contingent liability is out, depreciation is subsidiaries, so minus 650, minus 650. Anything else? Subsidiary, revaluation is out, finance cost, parent is making the payment, so that's out. All done. Equals sum 7440 minus 650, 6790 into NCI percentages?
10%.
10 or 20?
10%.
Sure. Okay, 10%. This into 10%, 679 is your NCI percentage. NCI value. Therefore, I come here, NCI share of profits. 679 done. Therefore, parents profits 12206 done and dusted. What do we have? Goodwill on acquisition to calculate. So goodwill on acquisition, this is my requirement A, this is my requirement B in the exam. Goodwill on acquisition, what do I need? I need investment cost. So my investment cost, I need investment cost of the parent and then NCI. Everybody with me? Everybody with me? I took the parent's total investment cost. I already have it 100,800 done. And then I need to get my NCI investment cost. To use my NCI investment cost, the question says to use the share price, correct? Total 16,000 shares. 16,000 shares, NCI percentage is how many percent? 10%. Equals 16,000 into 10%. Share price is 3.5 or 8, guys? Huh? Super, 3.5, 5,600. From this, what do I do, Hansel? I deduct acquired net assets. And acquired net assets, what do I have? Share capital. How much my share capital? How much share capital? 16,000. $16 million one equity share capital. Guys, need more effort. Okay, at this point, not enough. Not really enough. Okay, not really enough. By now, you should give me the figures, and I should be, wondering where the figures are. You should be teaching me. You should be guiding me. You have to be that quick. Okay, you should know where the figures are. Figures are very important, guys, in life. Okay, 16,000. And then what do I take? Retained earnings. How much is retained earnings? My retained earnings. I did something to do with my retained earnings. I spoke about it somewhere. See, retained earnings has to be time proportion. Retained earnings given is how much? They have given us retained earnings. Here, 56,000. 56,000 that is given on 1st of October, but I need it for January, October, November, December. 3 months allocation. 3 months allocation. How do I allocate 3 months allocation? From where? 9920. Yes, this current year profit has to be allocated for 3 months. Same way how we did it in the last question, but in the last question it was given it separately as a part of my balance sheet. Financial position. Therefore, 9920 into 3 over 12. 9920 into 3 over 12 gives me how much? 2,480. At acquisition, anything that is happening at acquisition? At acquisition, contingent liability. At acquisition, revaluation. 2,600 and 850. So, contingent liability, how much is that? 850 minus 850. So my retained earnings is adjusted equals sum. And then revaluation. Revaluation at acquisition, 2,600 is given, but apart from that, no revaluation is given. So 2,600 is taken. Therefore, total 76,230 in that our percentage is 90 equals this into this 68607. Therefore 100 minus 68607, parent gets 32,193. Is it correct? Okay. And then we can do the same with HCI. So HCI is going to be 10%, my dear, equals 76,230 into 10%. Exam. One thing where students mess up in the exam is they take 68607 into 10%. You have to take the total net assets. Your total net assets you have to take. Oh, I think there is an HCI negative goodwill. Therefore, equals 5,600 minus 7623, 2203. Therefore, you can set it off and you can show your total goodwill in the exam as this 30,170. So, requirement A and requirement B in terms of gold is done. No, here they are not showing. Here they are not showing as per the updated one, right? Do you have the updated one? Can I have a look at it? You don't have physical copy, no?
What? No. Gold,
That's the name. No, yes. No. they're not showing us how we are showing. They're only showing the 3 mandatory headings. Apart from that, you know, I mean, they're not categorizing it. Even this is, if Kaplan is doing, I can't be more than Kaplan. But I just went with the standard itself. Better, I mean, if you can do it, it's better. Okay, so as a part of our marathon, we have covered your 2 questions that you requested. Tomorrow I'll be looking at most likely ratios. Ratios are, interpretation is the most important area. I know that's where students are messing it up.
அதை எழுதுறதுக்கு கரெக்டா சொல்லி கொடுங்க சார். கரெக்ட் தானே? We are seriously blank with that written part.
Okay, so I have done any questions with your ratios? Okay, that was a challenging question. Okay, so we will look at 1 or 2 questions tomorrow also. Number 1, I will do a question with you, and number 2, I will guide a question with you, and number 3, if time permits, there is 1 question he wanted me to do, which gives me time to do tomorrow. I will be doing that, and on Thursday I am planning to take you through entire mock paper with you. Okay, so that's my plan. I hope the session was helpful, and we will meet tomorrow at 9 a.m. in the morning. Thank you. Bye bye. Enjoy the rest
Thank
of
you.
the day.
Bye bye.
I am connecting it with my mock. I have a part there.
எனக்கு doubts இல்ல.
தான் டிக்கெட் ரைஸ் பண்ணிருக்காங்க நோடி
லைக் குரூப்பில் எதுவுமே வரல.
சார் நோட்ஸ் சாரே சென்ட் பண்ணாரு. ஸோ நாங்கள் ஷேர் பண்ணிட்டோம். பட் எக்ஸல் சார் ஷேர் பண்ண முடியாது கிளாஸில் பண்ணுறவங்க.
லைக் ஃபேக்கல்ட்டி கனெக்ட்க்கு அதை அவங்க ஷேர் பண்ணால் தான் நம்ம ஷேர் ஆகும். லைக் வாட் எவர் த நோட்ஸ் வந்து
இதுக்கு முன்னாடி அவர் அவர்கிட்ட சொல்லும்போது பாதி எக்ஸல் அப்லோட் பண்ணியிருக்காரு. மீறி பண்ண சொல்லி 4 times நான் சொன்னேன். லாஸ்ட்டு போகும்போது சொன்ன கேட்டோம் நான் இப்போ போய் பண்ணிடுறேன். அவர் எங்கள்கிட்ட என்ன சொன்னாங்கன்னா ஐ கேன் டூ எவ்ரி டே வீக்லி ஒன்ஸ் அது முடிச்சோடனே ஐ கேன் டூ அப்படின்னு சொன்னார். டிக்கெட் நான் 3 times ரைஸ் பண்ணேன் அவர் சொன்னார். பட் அவர் அப்லோடே பண்ணிட்டேன்.
லைக் ஆப்ல சொல்கிறீங்களா இல்லை லைக் நான் இன்ஃபார்ம் பண்ணிட்டேன்.
நான் கேட்போம் நிறைய சேஞ்ச் பண்ணி சென்ட் பண்ணார். இது பண்ணது எக்ஸல் சென்ட் பண்ணியார். அப்புறம் நாங்கள் சொல்லிட்டே வாங்கிட்டோம். பட் எக்ஸல் இங்கே தான் கேட்கணும். ஸோ நான் 3 times டிக்கெட் ரைஸ் பண்ணேன்.
ஓகே சார் ஆனால் எக்ஸல் அப்லோட் பண்ணிட்டேன் பிகாஸ் ஏன்னா
சேம் டைம் ஒரே எக்ஸல் 2 தடவை அப்லோட் பண்ணேன்.
அப்புறம் சொன்னாங்க நீ அப்லோட் ஆக்சுவலாக அந்த ஃபர்ஸ்ட் 1 week அப்லோட் பண்ணிட்டு நாங்கள் டிக்கெட் ரைஸ் பண்ணது சேம் ஹேஸ் பீன் அப்லோட் அவங்க சொல்கிறாங்க.
ஸோ இப்போ என்ன எக்ஸல் வரல
அந்த 1 week அப்புறமா இருக்குது. ஸோ வி டோன்ட் ஹேவ் தட் நவ் பிகாஸ் ஏற்கனவே கிளாஸ் வந்து 3 weeks ஆச்சு. இப்போ சார் கரெக்டாக பண்ணுறவங்க மட்டும் அப்லோட் பண்ணால்
லைக் மேரத்தான் ஆப்பில் வாங்குறது குரூப்பில் ஷேர் ஸோ லைக் நான் ஃபேக்கல்ட்டி கேட்குறேன் பிகாஸ் அவங்க என்ன தராங்களோ அதை தான் அப்லோட் பண்ணுவாங்க. பிகாஸ் வி கேனாட் டேக் இப்போ எக்ஸல் கூட சொல்கிறீங்களா லைக் ஃபேக்கல்ட்டி தான் ப்ரிப்பேர் பண்ணுறாங்க. அவங்க வந்து ஃபேக்கல்ட்டி கனெக்ட் ஷேர் பண்ணால் தான் தே வில் பி ஏபிள் டு அப்லோட். ஓகேங்களா? ஸோ அதுதான் இங்கே ப்ராப்ளம். இப்போ நீங்கள் சொல்கிறீங்க அனுப்புனேன்னு சொன்னாங்கன்னா
அவர் ஃபர்ஸ்ட் அனுப்புனாரு. கடைசியாக வரணுக்கு முன்னாடி ஒன்று அனுப்பியிருப்பாரு. அதை நாங்கள் அப்லோட் பண்ணோம். அப்லோடே பண்ணேன். நாங்கள் ஆல்ரெடி
அனுப்பியிருப்பாருன்னா லைக் ஆப்பில்
அவங்க என்ன சொல்லுன்னா அவங்க இன்னும் அப்லோட்
ஸோ என்ன அவங்க டைட்டில் மட்டும் உங்களுக்கு என்ன தெரியும்?
இல்லை ஆக்சுவலி நேம் மாற்றல அவர்
சேம் இருக்கு. அவர் வேறு பிடிஎஃப் பண்ணிருக்காரு. ஸோ
எக்ஸ்ட்ரா
ஸோ நாளைக்கு திரும்ப செஷன் வருவீங்க. ஸோ அப்போ நான் வர இன்டர்வல் டைமில் நம்ம சார்கிட்ட டேரெக்டாக நம்ம கேட்போம். ஸோ ஒன்ஸ் அவர் ஒரு வேலை அதை சென்ட் பண்ணலைன்னா இது ரெக்வஸ்டிங் டு ஷேர் ஆகும். சரிங்களா? பிகாஸ் அதுதான் ஒரே ஒரு ஆப்ஷன். நான் இங்கே தான் இருக்கேன். ஜீவா ஓகேவா? இல்லை எங்கேயுமே டேரெக்டாக என்ன டாக்குமெண்ட்ஸ் வந்து ஃபேக்கல்ட்டி வந்து ஷேர் பண்ணுறாங்களோ அதை தான் ஆப்பில் அப்லோட் பண்ணுறாங்க. ஸோ டேரெக்டாக ஃபேக்கல்ட்டி அப்லோட் பண்ணுற மாதிரி இருந்தால் ஸோ அவருக்கே தெரியும் என்னென்ன நோட்ஸ் அப்லோட் ஆயிருக்கு. இப்போ அவர் ஒரு வேலை கரெக்டாக ஷேர் பண்ணியிருக்காரா இல்லை அந்த ஷேர் நோட்ஸ் தான் அப்லோட் ஆயிருக்கா இல்லையா ஸ்டெப் மாதிரி இவர் இங்கே சென்ட் பண்ண அவங்க அப்லோட் பண்ணுவாங்க. ஸோ நடுவில் இப்போ கரெக்டாக நோட்ஸ் இதுதான் ஷேர் பண்ணணுங்கிற மாதிரி ஒழுங்காக கமெண்ட்ஸ் கொடுக்கலையோ இல்லை அவங்க ஒழுங்காக அண்டர்ஸ்டாண்ட் பண்ணலையோ ஸோ அங்கே அந்த மிஸ்கம்யூனிகேஷன் நடுவில் நடக்கும். ஸோ நம்ம அவர்கிட்ட நாளைக்கு தெளிவாக கேட்டுட்டு என்னென்ன வீடியோஸ் அப்லோட் பண்ணணுமோ அதை வந்து அவர் திரும்ப கூட ஷேர் பண்ண சொல்லுவோம். வாங்கிட்டீங்க பட் இட் ஹேஸ் டு பி அப்லோடட் இன் ஆப் அக்கார்டிங்லி பிகாஸ் நிறைய ஸ்டூடெண்ட்ஸ் இருக்காங்க. ஸோ அதனால வில் ஜஸ்ட் டுமாரோ வெரிஃபை அண்ட் வில் மேக் ஷூர்
ஒரே ஒரு ஸ்டாண்டர்ட் மாற்றிருக்காரா?
லைக் என்ன நோட்ஸ் எடுக்கிறாங்கன்னு எங்களுக்கும் தெரியும். ஸோ சப்போர்ட் டிக்கெட்ஸாக வர்றது பார்க்குறவங்களுக்கும் நோட்ஸ் அவங்களால என்ன சொல்ல முடியும்னா டீம் கிட்ட புஷ் பண்ணுவாங்க.
அவங்க வந்து எனக்கு என்ன
பையா
ஸ்பெசிஃபை பண்ண சொன்னாங்க.
ஏசி ஆன் ஆன் भैया स्टूडेंट टेस्ट का
அவங்க ஸ்பெசிஃபை பண்ண சொன்னாங்க என்ன ஸ்டாண்டர்ட். ஸோ ஸ்பெசிஃபை பண்ணேன். நெக்ஸ்ட் கால் வந்து அப்லோட் பண்ணிட்டோம் அப்படின்னு சொன்னாங்க. ஸோ
அவர் சேம் வெர்ஷன் தான் ஒரு ஸ்டாண்டர்ட் இன்க்ரீஸ்
மேபி
பண்ணி
அவங்க
மாற்றி
டீம் கிட்ட போட்டு பார்த்தீங்கன்னா அந்த நேமில் ஒருவேளை ஆப்பில் அப்லோட் ஆகிருக்கிறது ஒரு நேம். அந்த நேம் வந்து அந்த நேம் தான் ஸ்பெசிஃபை இருக்காங்க. உங்களால் ரெக்வே பண்ண முடியும். நீங்கள் ஒரு நோட்ஸ் இல்லைன்னு சொல்கிறீங்க அதோட டைட்டில் இருக்குங்களா அந்த டைட்டிலும் உள்ள இருக்கிற நோட்ஸும் சேம்.
ஆக்சுவலாக நான் எப்படி வெரிஃபை பண்ணேன்னா அவங்க இருக்கிறது வந்து 60 வீக்ஸ் ஸ்டாண்டர்ட்.
அவர் வந்துட்டு எஃப்ஆர் ஒர்க் 2025 மாற்றிருக்காரு இல்லை. ஆனால் அதில் வந்துட்டு
hall?
Study.
Study hall, like you can accommodate that.